Mag 7 in a different way. Sean O'Hara, thank you, President of Pacer ETFs. We appreciate it. Coming up, a quick break. You are seeing U.S. stock index futures to the upside here. The start of trading is just moments away. The opening bell. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream Schwab Network live at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
Welcome back to Opening Bell. It's time to count you down to the start of trading. After 2 weeks of gains, we've had some up arrows again here this week. We're looking, obviously, at maybe talking again once with Iran this weekend. So a lot to watch there. And oil has come down some, and we have a lot of news when it comes to banks and Amazon and more. And Sam Vadas is with us and watching it all. So some of your thoughts this morning.
Right, yeah, so some nice price action building on the gains we saw yesterday. We've now regained the war's sell-off. I think that's really notable now, Nicole. And obviously, the Iran conflict starting on February 28 at 68.78 right now. And the S&P 500, of course, are recouping some of that within 1.5% or so within the all-time highs. So this is obviously something that many are tracking right now. The NASDAQ also up 9 days straight. So technically, things have looked pretty supportive here. Also, as the major indices have been distancing themselves from those key 50, 100 and 200-day moving averages too. So people have been talking about the great price action we've seen in this market, but they have also cautioned about weak volumes. In fact, yesterday, although we did see that nice gain, particularly that late stage rally in the afternoon, we still saw the weakest day for volume of 2026, the second weakest day, I should say, for the year. So there still seems to be a lot of talk amongst traders this morning that there is a lack of positioning in this market right now, and the chase is on. So big question as to whether we can believe in this rally just yet. But I mean, certainly putting the wind back in the sails of markets again this morning. Coolest PPI, of course, significantly milder. We've had Besant talking about a bit of a wait and see approach on lowering interest rates, so we'll wait and see. As far as the banks, of course, we've had some mixed earnings out of them. The IEA with oil seeing demand falling for the first time since 2020, so that's obviously being factored into oil prices this morning. Pakistan, as you mentioned, saying that they're going to be obviously holding these talks between the US and Iran on Thursday, so we're counting down to that. And in the meantime, as far as the brokerage calls on equities, I mean, Citi upgrading US equities to overweight, EM to neutral, but BlackRock upgrading US and EM to overweight as well. So it feels like we're going back almost to this pre-war playbook, Nicole. I mean, if you take a look at the Asian session overnight, overnight. You had a nice rally, particularly in Taiwan. In fact, the TAIEX hit a record overnight thanks to heavyweight TSMC. I'm also keeping an eye on, speaking of Asia, some Chinese ADRs this morning. Just watch Pinduoduo, watch Alibaba, watch JD. We've had a Chinese report out suggesting that they could cop a fine over some of those food delivery practices. That's according to the Nikkei Asia. So that's a story that I'm keeping eyes out on as well.
And the IMF forecasts for growth have come in over the last 10 minutes or so, and a little bit weaker, coming down a bit, 2.3% versus the 2.4% forecast prior.
Yeah.
Also for euro growth. U.S. Treasury Secretary Scott Bessent talking about the agenda for G20, and it's going to be all about growth and the global imbalances and the risks that go with that, and with a focus on China in particular. You are looking at NVIDIA with some news.
Right, yeah, so it's come out and denied this report that we learned about yesterday. This was according to Semi-Accurate. According to their website, NVIDIA had been in negotiations for over a year to buy a large company, they say, that will reshape the PC landscape. And they've been following this story, they say, since late 2024, and the time is approaching to make a deal or walk, they say. Subsequently, we did see shares of some of these PC makers like Dell, HP, on some of the speculation that these could be some of the names that are involved here, rallying yesterday, but then NVIDIA coming out and denying that report from that website, saying that the media report is false. NVIDIA is not engaged in discussions to acquire any PC maker. So obviously that's something to look at, and they have sort of nipped that in the bud now, but we did subsequently, as I say, see a nice pop in some of those companies. Across the tech landscape, though, I mentioned this yesterday, Nicole, you and I were discussing it. Keep an eye on Intel today. 9-day winning streak. The last time we saw that was back in 2023. 13-day winning streak would take us back to 2005. So let's see if we can make it 10 today. It could certainly be looking at potentially another sort of record winning streak here, as far as, you know, taking us back to the early 2000s. So keep an eye on that.
Exciting, right? Five-year highs there. Citi, 18, looking good. Sam Vadas, thank you. Folks, it is time now for the opening bell. Go. We're looking at the stock market with some up arrows this morning. The Dow Jones Industrial Average is at 48,234, gaining 16 points right now, so fractionally higher. 69.06 on the S&P. I love seeing the 69 handle, right? You haven't seen that in a while. And by the way, yesterday when I was taking a look, do you know we are now positive for the year, right? Year to date, the S&P is now positive by nearly 1%. Looking at the Dow Jones Industrial Average, now you got me wondering. The Dow Jones Industrial Average is positive by 0.4%. And the tech-heavy NASDAQ, which is up right now at 25,531, year to date is up 1.1%, right? Just when it was all doom and gloom, people are feeling a little better. Year to date, the Russell, the small caps, if you were in that, you are so happy. 1 year up 46%. I almost can't even believe my eyes. Year to date up 8%. Okay, that's where we start here as far as sectors. There's plenty of green here. Some of the leaders include tech and communication services, and also consumer discretionary. Let's continue to take a look at some of the story stocks, important names to watch. Diane King Hall is here. We just had our opening bell, and the Dow is up 12 points here, Diane. You're looking at Oracle power deal with Bloom Energy. Yeah. That's another big one.
Yeah, this powerful rally continues for Oracle. Bloom Energy also rallying big this morning off the back of an extension of their partnership. So Oracle and Bloom Energy announcing an expanded partnership where Bloom Energy will support the build out of AI infrastructure and cloud computing as well. Oracle looking to procure up to 2.8 gigawatts of Bloom fuel cell systems under the deal. Now, previously, the first 1.2 gigawatts was already contracted and is already being deployed now through next year. So why does this matter? AI data centers, we know, use enormous amounts of power. So traditional electric grids can be slow to expand or just already overloaded. So this fuels the next generation. Bloom's fuel cell offer on-site electricity generation, faster deployment than waiting for the grid. reliable backup power, better support for the nonstop AI workloads. We know AI is just often nonstop. Oracle's doing this because they've been aggressively building out their cloud and AI business. So a big surge, adding to the advance that we saw in shares of Oracle yesterday. Shares of Oracle gained almost 13% yesterday. Today, adding another 6%, nearly 7%. Bloom Energy up 14% right now off the back of this, Nicole.
Oh, yeah, and at a new high. Bloom Energy, the high 208.97 has pulled back a little bit, but you noted the 14% gain. I just pulled up a 3-year chart, but definitely a new high, at least multi-year high. Let's take a look at CarMax.
Yeah, CarMax, this one's a tough one because it actually did do better than expected, but there's not a lot of grace being shown to CarMax because, listen, profit and sales were still down on a year-over-year basis, so the stock is slumping 13%. Investors are just asking the question, what have you done for me lately? And it's clearly not enough from the viewpoint of investors. Adjusted earnings per share came in at 34 cents. That was better than expected. She was looking for 21 cents. Revenue coming in at $5.95 billion, also better than expected. But again, that's down on a year-over-year basis. Revenue down 1% year-over-year. Investors are focused on slowing fundamentals here. Sales are still soft. Retail unit sales fell 0.8%. Comparable store used unit sales declining nearly 2%, off 1.9%. You see that decline in gross profit off by more than 9%. CarMax seems to be using lower prices to stir up demand here. It's good for customers, but it's tough for margins there. Their wholesale business was mixed. Wholesale unit volume rose 3%. That is a positive sign. The street is not paying attention to that overall, because you also want to keep in mind average wholesale prices actually dropped about $270. So that pressures revenue. Gross profit per wholesale unit also fell. More cars sold on both the wholesale side and the retail side, but at lower profitability. So it just highlights this ongoing reset they're having. They have this new CEO, Keith Barr, who took over in March. He says execution and efficiency are top priorities, but from the viewpoint of investors, not executing well enough, clearly. And you recall that Starboard had recently disclosed a stake. So there's some activist investor activity around this one, Nicole.
So they did cut prices to bring the customers back, but this new CEO, they said, that you just mentioned, has some work to do.
Yeah, he does. Work cut out for him.
All right, down 14.25% now. How about last but not least, we look at J&J. Yeah,
J&J. We'll continue to watch the investor reaction because they did do better than expected. Shares a little soft this morning, off by 0.5%. But look, it's been an outperformer year to date. That stock up double digits, outperforming the S&P 500 so far this year. And we've talked to many analysts who've called for healthcare to be an outperformer. They topped first quarter expectations. Adjusted EPS coming in at $2.70. Revenue coming in at a touch above $24 billion. So both the top and bottom line better than expected. They also raised their full year outlook. They had strength in the cancer drug Darzalex and its psoriasis treatment. They had strength there. That helped offset a sharp drop in Stelara. That fell about 60%, lost patent protection. So there have been some worries about, okay, once that patent cliff hits, what does the rest of the pipeline look like? So they did actually offset it. They did do better than expected. They also had solid growth in their medtech unit, medical technology unit. Again, so there was some general strength that helped offset that Stelara patent cliff. It's still a watch item for investors here. Not enough to cause serious damage to shares. Look, we're seeing shares almost recover in real time right now, Nicole.
Yeah, raising the quarterly dividend too. People like that. Yeah, you just said it. Recover in real time, and there it is. Now we're up 0.5%.
Yeah. There
Diane King Hall, making news. Thank you so much, Diane. Okay, coming up, folks, we'll take a look at some of the technical trends here on Wall Street. Stocks to watch. What things could be poised for a breakout that you need to know. In the meantime, right now, the Dow Jones Industrial Average is up 61 points. And BlackRock is, Larry Fink's out, and he's making some positive comments. That stock's up 2.3%. We'll be right back.
Others recap the news. I help you read between the lines, from what's moving markets to what's next, with sharp takes and market know-how. Follow me on all social media platforms at Diane Danielle, and connect with me on LinkedIn for more.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. Joining me right now, Mario Lagana, Head of Technical Analysis, Senior Institutional Equity Trader at Roberts and Ryan. I'm so glad you're with us. How are you feeling about this market, which in fact has now turned positive for 2026? Is that what you anticipated?
Good morning. Thank you for having me. Yes, the last couple of weeks have been very positive for the market. We've had the S&P and the NASDAQ put in a nice bottom. Then we had a big follow-through day, gapping through the 200 and the 50-day moving average. That's very powerful. We did close above those levels, which are both now support levels. Last week, we did see some higher volume, so that's telling us that there's some big institutional sponsorship buying into the rally. There was some short covering, but since then, we had multiple follow-through days this week, and you see that evidence in the volume that the institutions are participating, and people are still scratching their head, why is the market going up? We think we're poised to go a lot higher from here.
Understood. So what kind of moves are you going to be making between now and the end of the year?
Well, I mean, the market seems to have made a decision that everything that's happened in Iran so far, it's comfortable with. So you're seeing these follow-through days. I believe that we'll, test the highs, possibly break out, maybe have some single-digit gains into the end of the year, as long as, nothing crazy happens with the news. But so far, the market has been taking all this news in stride, and it likes what it's seeing down 6 or 8 months down the line. So that's a big positive for me when you see that type of reaction. Also, when you see a lot of down days that are closing on higher days, that's a big signal that people, are comfortable with this market. There are a lot of people that were mispositioned, and they think the market was going to go lower, but it's seeing that a lot of these stocks are all poised, and you're seeing the market leadership broadening into different sectors, AI and financial. So that's an encouraging sign also.
Can we talk a little bit about the technical analysis? What are you watching most importantly, whether it's on the day-to-day or on the longer trends and moving averages?
Well, we concentrate. Well, when the market was in a downtrend, when we hit bottom a couple of weeks ago, we concentrate on the 10-day and the 21-day. And once the market recaptures and regains the 10 and the 21-day, we then turn to the longer term 250, the 200-day and the 50-day moving average. So as long as we base and hold above that 50-day, that's a good sign. I feel that we're going to consolidate here, and if we stay above those levels, we are definitely positioned to go a lot higher.
What stocks jump out at you right now?
Right now, I'm watching Comfort Systems, FIX. It's building air conditioning and heating products. The chart has a lot of institutional sponsorship.
me. All right. Good morning, everyone. How are we doing today? I just got on. Can you guys hear me okay? So we did break out of that thick trading volume area here between 69.60 and 69.55. Had a bit of a sweep here. Came down to about the top of that golfing candle. Is that what you call it? Got to the bottom of that thick range, then popped above it here at 10.05. We are positive GEX, positive delta exposure. Vega is expanding. DEX shift is up 151. We are rolling today. It is a good day in the markets. If you're trading, let us know in the chat if you made some trades off this. Had a busy day already at work. Got all those slides updated again. Of course, all the numbers changed when we got a new database. So I had to re-update everything. That's cool. Slides are looking good we have a big briefing. Today Tuesday? It's Thursday. We have a big briefing. Hey, don't forget, I had to get a new Twitter account. I'm going to put a link in the chat. If you get a chance, go there and, I don't know, follow it. I'll follow you back. And then if you guys do make some trades, I give you a shout out there on Twitter. Here we are, 10:15 on Tuesday, April 14th in the live stream. Got quite a few watching. I know we got Ashley coming from Australia. Who's our lucky guy or gal that's in Vienna, Austria? I forget who that was, but we got people from all over the world. We got people all over the world watching this free live stream of gamma exposure for SPX and ES on the charts. The delta speedometer has been ticking pretty positive. When you see this tick negative like this, but price is still going up, that's your cue that sellers can't bring it down. I would show volumetric bars, but if you're not familiar with volumetric bars, they're hard to see. They're hard to zoom out so you can see price action and see the TDD operational average. They're handy. Don't get me wrong. They're awesome, but they're hard to see. If you're not familiar with volumetric bars, I'll put a link in the chat. You're in Italy? What? We got Australia, Italy, Austria, all represented here. This is absolutely incredible. Worldwide. I'm going to call this the worldwide live stream. All right. Bray's asking a question. Bray Ross. I hope I'm pronouncing that right. How do we know where we have to make an entry when SPX is in a price, but ES futures has a different price due to spread? So, great question. ES futures and SPX will always have a different price. Always. Unless we are trading the last day of the futures contract expiration. That's probably going to be the only time you will not have, well, there'll still be some type of spread always, because anytime you have a contract where time is involved, there's always going to be a spread from an underlying where time is not involved. Well, how are you going to know when to make a trade? Well, that's up to you. And that's kind of what this dashboard represents. And you can see the heads up display here on the left where it's telling you the GEX, DEX, and VEX all positive. And then the tactical advice is saying VEX is positive. Market makers are short vol. Buy the dips. So you simply just want to look for dips. However you look for dips. If you like trading the pullbacks, if you like moving average, I've got the operational moving average on here. The slope is positive and has been positive for the day. You can throw on some fair value gaps. I can throw fair value gaps on this chart if you want. There's a lot of things you can do. You can wait for a breakout past heavy volume. You can use MACD in the early phases. However you like to find dips. But SPX is never going to equal ES on spot price, because one's a future contract that has time and one's an underlying that just tracks it index of the market, if that makes sense. That's a great question, though. I'm sorry I can't provide like absolute answer of when you should get in and when you should get out. Can't believe Germany. We got Italy, Germany, Austria, and Australia. No one's going to believe me. When I tell people this, no one is going to believe me. This is absolutely incredible. We got to figure out a way for you guys to send some pictures in or something. I don't know. Denver, Colorado. Hey, you're welcome. Thank you for joining. I'm going to call you Motocyclin, if that's cool. I think that's how you pronounce that. Motocyclin 3. Will you be offering access to the levels somehow, either through a script download or a member access? India? Are you kidding me? We are worldwide. Okay, Motocyclin 3, are you asking if I'm going to provide access so that you can have this on your NinjaTrader chart? Brazil? Diego, I thought you were from Brazil, man. But you just confirmed it. This is crazy to me. I understand, by the way, I'll add myself to the combo. I'm from what, Dominican Republic, but now you're in Boston? Holy cow. This is incredible. Motocycling. Yeah, yes, I will. So I'm trying to do this the right way. Tactical Data Desk LLC is veteran-owned, veteran-operated business, and I pride myself on integrity, service, and excellence. Never going to try to hype, fake, scam, lie, or cheat anyone. I am here for the sole purpose of giving back to the trading community, because I've been trading for 25 years, I think. Hold on one second. I got to check my work computer. I've been trading stocks for, I can't even remember when, since I was, honestly, I'm not kidding you when I say I was a kid. First thing I bought was Disney. And then a friend of my dad's, when they lived out in Arizona, he got me into options because he was buying stocks and selling covered calls on them. And when he was explaining this to me, I was like, what's a covered call? I mean, how many, raise your hand, even though I can't see you, but all over the world, raise your hand. If the first time you discovered options, you were totally lost and blown away. I had no idea what any of that meant. So this guy, who I'd never met before, I was living in Chicago, downtown Chicago. I was teaching aerospace science at the time. This guy lived on the other side of the country in Arizona, just a friend of my dad's, but my dad passed along his number. This guy and I would talk on the phone all the time throughout the day, on weekends, and he took the time to explain options to me. And after a while, man, I got it. I had it. And then I started trading options on my own, and I moved beyond straight, buying the underlying, selling the covered call, into selling puts, selling spreads, and then moved into zero DTE type stuff. And then I'd sell synthetic strangles, if you will, or covered strangles, whatever you want to call them. Move the chart to the left. Which left? This way or that way? Are you saying like that or like that? So just the more I trade, I'll just refresh it so those lines get redone. The more I did it, the more I discovered that there's got to be more to trading an edge than, just straight looking at the options chart and going from there. Did I kill that feed? Must have. Text overlaps the candles. Yeah, that happens sometimes. I'm just going to restart the engine. Give me a sec. So what he did, once again, everyone, I have too many things open on my computer. That's, I'm a very organized person. Place for everything and everything in its place. But it's the Schwab API. I got to go back in and reauthorize the API. We had this discussion last week, if you recall. That Schwab authorization token only lasts for about 7 days. and then you got to go in and reauthorize it. So I got to go in and do that. It only takes a second. There we go. So I don't even know what was asked. If I'm going off on a rant, someone stop me. But what he did is he would buy 100. He would buy 100 shares of 101 shares of the underlying, and then he would sell a covered call against it. So whatever premium he got for that covered call would be enough to cover that first share over 100. So when he got called away, that share was free. And that's how he built his portfolio, because he'd been doing that when options first came out. He was older than I was. I think when him and I first started, he was in his 60s or so, 50s or 60s. So, I mean, he just had this massive portfolio that he essentially built on covered calls, getting the stock for free. And that's how I got into options. Now, motorcycling, what I was saying is, I want to do this right. I don't want to just be some random YouTuber who's making fake videos using fake charts or charts that already happened. That's why I like to do all this stuff live, so you can see it live. I don't like to cherry pick things. So I've applied to be a licensed NinjaTrader vendor, so I can sell licensed NinjaTrader products. And that process is pretty extensive. I've had to go through 2 background checks. They go through all my business documentation. They go through all my social spaces like YouTube and Twitter, etc., and make sure it meets all their vendor guidelines for things you can say, things you can't say. Like, for example, if you look at the thumbnails on my videos, they no longer say made $1,000 trading ES, or this thing has 80% win rate, 90% win rate, etc., because that's never going to be true. So once that gets approved by their legal team, my vendor license, and I get set up, that way I'll be able to sell through their ecosystem and through my website, and then we can authorize all these things to work directly on your NinjaTrader through their API and your machine ID. So if you don't know how to find your machine ID, it's super easy. But so once that gets done, yeah, I'll be making all these things available. So because I've got so many awesome tools. I have this heads up display, I call it. This heads up display here on the left is one thing. And then these gamma exposure bars is another quote unquote indicator, separate. I can probably combine them into one file, but this is all very unique. You don't really find this. And then I've also got, where is it? I also have this amazing tactical data desk engine. This is a AI driven entry signal thing, I guess you want to call it. But this measures real-time order flow, cumulative volume delta, the regular volume and speed of volume, and speed of price, because that makes a big difference, and then gives you a score. And I have that score right now filtered to only give me scores of 100 or greater, and pretty accurate of when the best long is. Then you just have to decide what your entry point is going to be. So I've been watching that, and then I've got this pure 0 DTE gamma exposure HUD, which is different than this other one. I know someone just asked me, how do I calculate that? And I'll give you a rundown on that in a second. But remember, we've talked a little bit about how gamma exposure, delta exposure, vega exposure, etc., these are mathematical equations, and it essentially is. So, for example, gamma exposure is defined as the gamma times 100 times the open interest That's your gamma exposure for that strike, for whatever strike you're talking about. And then if you want to get total gamma for the calls and the puts, you just add all that up on the call side and the put side. And then always one side will equal more than the other side. And let's say if the put side has a higher value, then you have negative gamma exposure. And if the call side has a higher value, you have positive gamma exposure. So open interest, remember, that changes. I'm sorry, that does not change during the day. So if you pull up, yeah, speed of change is absolutely underrated. Absolutely. Not all bars are created equal. 100%. I know I've showed you guys this before. Hold on. As I get older, the mouse cursor gets smaller. So I've got the SPX options chain up on Thinkorswim, and I'm pulling it over. So here on my columns, I have the bid and the ask, which I can't get rid of. The last price it traded at. This is the 69.30 strike here. And then I've got delta, gamma, vega. This is the open interest. See how that says 43? Then I have implied volatility and then volume. Now, these numbers here, open interest, will not change during the trading day at all. These are a static snapshot of all the settlements for options trades that happened the day before. So, we know SPX stops trading for retail at 4, and then your bigger institutions and market makers can trade before and after the market. But usually around 7 p.m. is when everything is done and everyone has to report their positions. Because believe it or not, they have to report their positions to the clearinghouse. And then that's when open interest gets settled. And so that's how GEX, DEX, and VEX are calculated via open interest. Volume here, the last column here, I'm on the put side. And on the call side, it's the first column after the bid and ask, or I should say ask and then bid. It's reversed. Volume changes real time as the market goes. Okay. So using GEX, VEX, and DEX are powerful indicators to gauge where the market's going to go. Can't always say when it's going to go there, but it's defined hedging for market makers. But look at the open interest of 43. SPX is plus 47, so it's 47 points greater than it closed yesterday. So if we take 69.30 and subtract, let's round to 50 because math is hard for me. 69.30 minus 50 is 68.80. Look, math, it's crazy. You go to 68.80, that open interest is 747, and that first strike below it, the open interest is 1.5 times that. And then if we go down to 68.45, that's probably yesterday, that was probably your 30 delta strike at some point around midday, mid-open, and then your 6,800, that's been a put wall on the OPEC side for a long time that has your greatest open interest. Then look at the volumes. Very thin volume on that today, but significant volume here at your, starting around your 40 deltas and up through, no, not 40, 4 delta. Everyone loves to trade the 5 delta. They think 95% chance. Then you've got your 6 delta and your 7 delta and lots of volume. Here's your 15.8 delta or your 0.156 delta. That's your one standard deviation away. If you follow Tasty Trade, they love that one standard deviation. 26,000 on that. Okay, so then you ask, how is it? Got to maximize that. So this heads up display is purely a 0 DTE play. And this is based off the open interest, which was yesterday. But then I've got synthetic call walls and put walls that are predicated from open interest, but then actual live volume that's hitting the tape and the strikes. You can see I got the live intraday flow. It's seeing which strikes are the most bought on the call and the put side, where the flow is growing. And you can see the flow on the call side is growing significantly greater than the call on the put side. And as you can tell, we've rocketed right on up. The basis for the change is now 37. You've got your overnight put wall, overnight call wall, your synthetic call wall, and then 2 minor levels. Now these will change throughout the day, these levels, based on flow, options flow, which is all real time that I get. I'm telling you, man, these levels are spot on if you like to trade 0 DTE. And then this HUD, this uses, these levels are, I'd say, I won't say more or less accurate. It just depends on, they're more reliable for longer term trade. Like 0 DTE, you want to get in and get out. These are more of like longer term for futures, because this is more, the math is more based on trading ES futures for it. And this is a special math calculation that I used for measuring gamma exposure, delta exposure, and van exposure, because it includes not just the 0 DTE, but it weighs the quarterly and monthly OPEX and the weeklies. And there's a special blend of that. And that's why you can see that these levels are so well respected. All right. Manus 9103. That's what I got to call you, because I can't pronounce that. Manus Rivestava. I love it, but I'm going to call you 9103. Your question. Where is it? Okay, just curious. Call wall was 69.50. Price should have returned from there. Any possible reason why I didn't? Yeah, absolutely. So you can't just blindly say, oh, there's the call wall. Price is going to go down. You said 69.50. I really haven't been watching the chart, but 69.50. I don't know if you're talking about the SPX call wall or the ES call wall, which is just adjusted off the SPX price. Let me make sure the spot delta is correct here. 37. See, 37 is greater than 34. All right. Now, you can't just watch the call wall and say price is going to hit there and go down, because what's happening above it are more call walls being formed. So let's say right now, let's zoom out a little bit. Let's say your next biggest call wall is for ES is 69.87 here, right here. Okay, that's cool. Now we're at 69. We at 70? 69.70. All right, so we're like 17 points away. So you can't just say, oh, it's going to hit that call wall and go down. You got to watch the gamma exposure up here. Because if a call wall at 69.98 is rapidly growing, what that means is institutions are buying calls up there and market makers are having to sell the calls there. And then this wall might be reducing. That's why you got to watch the options flow, not just 100% base it off what the open interest was. If these are getting bought to close, and the call wall is forming, then price will probably blast right through that. So there's so much that goes into it. It's just a gauge. Everything's a gauge to give you an edge. 9103 sounds good. All right, Ashley, is your NinjaTrader linked to Schwab data feed or something else? Or are you using Schwab API for charts and HUD indicators? So it's a good question. So you can get live data lots of ways. You can pay for it. You can go to massive.com and pay, forget how much they have different tiers, but I think the cheapest one is $30 a month, and that's just for indexes. Then you got to pay different subscription for stocks, a different subscription for futures. So anyway, you can pay for it. But yeah, I have an API with Schwab that pulls in the data, and at twice per second it pulls in real-time data. And then I have a script that I wrote that does all the math on the fly, and then that math writes to a file. And then I wrote a custom C+ code for NinjaTrader. And NinjaTrader, this code for these two indicators, reads that file twice per second and updates my NinjaTrader chart twice per second. So it's essentially a real-time gamma exposure and DEX exposure. Yeah, that's how that works. I'm originally a non-directional option seller. That's awesome. That's great. I mean, that's the easiest way to do it, non-directional. Honestly, it's fantastic. That's a great way to do it. Yeah, George, can see your question up here earlier. What expirations are you including in your calculations? When I use only 0 TTE, my regime and flip change more often. Your structure seems more stable. Yeah, that's exactly what I'm trying to get at when I did this. I did a lot of research on this because, as you know, there's a lot of places you can buy all this gamma exposure stuff from. I didn't want to. So I sat down and did the math myself of what's the most reliable way to calculate the heaviest GEX, DEX, and VEX exposure that will be the most reliable. So I've got custom math in this, and it doesn't just include 0 DTE option chains in here. It's got a weighted for different expiries. Okay, but now I'm trying to crack future prop firms to get some capital for my real accounts, and I'm struggling so bad with the directional day trading. Yeah, it's tough, man. Before you, this is what I would recommend. Not a financial advisor, but before you spend the money on prop firms, I just use a NinjaTrader Sim account because it's all real data. Do you guys just see the call walls grow? All of them grew. As I was talking, they all just grew. Even though we're headed down here, this big red candle. Anyway, before you spend money on prop firms, and if you want to do it, that's cool. It's great. But just spend your time in a sim account. And you literally have to just sit here and watch the charts and watch price action and find your way every day. My personal advice, this is not professional trading advice from Tactical Data Desk LLC. This is just my personal advice. If you are not watching the live tape and watching these candles play out as they play out, you are not going to learn from it. Because watching how these candles tick, how they open, how they tick up and down, where the wicks are, where they close in relation to everything else based on time through the trading day, it will not make sense to you. I mean, you don't have to do that while the market is open. You can get NinjaTrader or Thinkorswim and you can do market replay. But just my point is, don't get on a computer at 7 p.m. when the market's closed and just look at these candles and say, oh, I got it figured out. Because it all depends. Like earlier, we were talking about the speed of price, and the speed of volume makes a difference as well. And speed of cumulative volume, delta, makes a big difference as well. Watch how they play out, and you will learn. You'll just see the same patterns repeating over and over and over and over. And if you can consistently watch that for a couple days, couple months, whatever, man, you will literally just, you'll be like the Matrix. You know those guys in the Matrix movies with Keanu Reeves that the ones that are driving the ship where the computer code just goes down and the green lines and whatnot. And like, oh yeah, there's a cat walking, and then there's a girl eating breakfast at a restaurant. That's what I see, all this stuff. That'll be you. You'll be able to see behind the market. 9103, I'm thinking of using call put walls as zones, order flow time. Yeah, absolutely. That's a great way to do it. Call and put walls are great zones. Yeah, totally. And there's no, whatever gives you an edge and whatever you're comfortable with, and then you practice so that you are comfortable with it, is the best way to do it. Yeah, price action patterns are great too. Trend lines are great as well, but you got to remember, like, trend lines are just trend lines until they're not trend lines. The reason why I like to utilize GEX, DEX, and VEX is because that's what's happening in the market. It's a reflection of what institutions are doing, and it's a reflection of what market makers have to do by law. It's in their own proxy statements, and it's codified or codified, however you want to pronounce that, in an SEC regulation, the Securities Exchange Commission. I mean, that all codified in there. And then ICT, I think that stands for inner circle? Yeah, there's the dip. That's right. The operational moving average, guys. We hit that dip. Did not close below it. That's a good opportunity. ICT, I think that stands for inner circle trading. Is that right? I think. And that has to do with like liquidity sweeps, and I think, I'm not an expert on that. Liquidity sweeps and fair value gaps. et cetera, et cetera. Those are all great tools as well. And I use them. I think they're fantastic. The only caution is I would tell you, realize that not all fair value gaps are created equal. Not all liquidity sweeps are actual liquidity sweeps. But they are great tools, and you got to figure out what works for you and combine together. They're all absolutely fantastic. Now, I've got the ES 1 minute chart here, and again, integrity, service, and excellence. I am not kidding you guys. If you step back, let's do it. Let's do it for a second. Hold on. I'm doing something on another. I'm doing something on another chart that I'm going to bring down as soon as it loads. This is 240 minute or 4 hours. Oh, I got too many days going. It's calculating. I have a lot of other things running on my computer. This is the 240 minute chart. And you know, if you watch this chart, like, let me turn this off. There are some great opportunities here looking at long-term charts. Like, see this here on April, I think this is the 2nd when market opens. This is a great example of a liquidity sweep where price comes down and raids below this low candle, but then closes above the candle before it and that low, and then price shoots up. And then we kind of have the same thing again here and the same thing again here. And the 4-hour chart or the hourly chart is a great way for identifying gaps, fair value gaps, liquidity sweeps. And then once you mark those on your chart, then roll down to a 5-minute time frame and say, all right, well, if there's a gap in that 5 minutes, that's where I want to make a trade or something like that. I'm going to be making a video about that as well, because there's this one. Let me move this a little bit. There's this one trader on YouTube who seems like a very nice person. Look at this volume profile. This is the same 1 minute chart, but it's less stuff on it. Look at this. Huge node. We are once again in a huge node. Once again, there's a huge node here, and it's thin in between. So popped up. This is value area high. Remember, value area high moves throughout the day. It's not static. So that you can't just say, oh, got to sell at value area high. But there's some selling there in that node. We'll see what happens. We break above or below this range here. This range defined by that. That's a sticking point. Anyway, he's got a great system for failed bullish and failed bearish breakouts that he uses on a long-term chart, 1 day or 4 hour, and then rolls down to a 5 minute and looks for fair value gaps. Phenomenal system. It's awesome. Takes a lot of patience. You may not have a trade every day. I love it. And well, another thing I have to offer is I've built an indicator that maps that strategy on NinjaTrader. It's pretty sweet. It tells you where it tells you where the failed bullish or breakout candles are based on those raids of a lower candle or raids of a higher candle. And then when those breakouts are active, paints a fair value gap and doesn't paint a fair value gap if it's not active. Makes a huge difference. So I'm just saying, always take things with perspective and utilize a higher time frame as well. I feel like I'm rambling. Probably am. Probably should fill my mic. All right, just real quick. I'm going to pull down. Here's the dashboard for exposure. You can see we have a minor wall at 69. This is SPX. Minor wall at 69.40. Major wall at 69.50, which has been a wall. We've been there before. And then 69.60, 7,000 on here. Well, I lose it right before 7,000, but I bet there's a wall there. And then here's the intraday GEX shift. And this intraday GEX shift is the same thing I show here. And that's super important to know. All right. Holy cow. Listen, how is the sound today? How's my mic sound? Because I'm still trying to find the best mic combination and setup so I don't have to bury my mouth into the microphone for you guys to hear me. Okay, 9103, you're asking for what is this line? All right, this line is another custom indicator I wrote. It's called the Tactical Data Desk Operational Average. I've got it set to 21 periods. I have the start time aggregating at 9 a.m. and the end time aggregating at 4 because you're 21, and there's also some other math in here that it does more than just take the straight average of that period, and that period. It does some calculations to make that average more reliable and smoother. But sometimes if you throw on, see, I've zoomed out, don't for a second. You see here at 9 o'clock how that drops straight down? This is the start time when this starts aggregating. Because if you were to throw on just a regular 21 period moving average, which I'll do, exponential moving average, it'll be different. And of course, it'll be different based on how many days you have loaded. Because even though your end point is the same, whatever time it is, 1 minute is 10:49, so it ended at 10:48. What color do I need to make this? Get something not white, right? Make it blue. Even though all right, so see the blue line? The blue line is your standard 21 exponential moving average. You see how it's higher, hugs price more, and it starts aggregating more. And this aggregates when the day starts. And now here's something else I'll do. So that I don't mess this up, I'll put this on another chart to show you. And then drag it down. 1 second. Well, if you guys don't mind, I'll show you because I like to do it. Oh, it's the wrong thing. Now I'm a little embarrassed. Such a hard time with this mouse. Okay, let's go. I'm going to put on my operational average. Starts 21 periods, starts at 6. And then EMA 21. Oh, wait, what color was that? I want that white. So this is going to be white, and your standard EMA is going to be blue. Standard EMA is going to be blue. It's going to load. All right, now let's see how many days I got going. Now for this to work, you have to have tick replay enabled. If you don't know what that is, let me know. I'll be doing a video on that anyway soon. But you see how this says days loaded 0? That's just today. That's from the 6 p.m. open on Monday night when the futures opened. I'm going to turn tick replay off, and you'll see that enter long here. You'll see that go away because that relies on order flow volume, cumulative volume delta to work. When you turn tick replay off, it doesn't go. Anyway, so if I switch this to 5 days, so my operational moving average is still going to start at 6 a.m. today. But the 21 period moving average is going to start 5 days ago. And you see that that's different. Oh, see how big of a change that made? And I wanted this operational average to start at 9, not 6. All right, so check out that. Let's take a picture. And we are blasting through. Let's take a picture. We are blasting through. And now when I switch to 0 days, you'll see that it's going to be slightly different. And this is the picture we took. You see it's just slightly different on the 21. So the operational moving average is a little smoother, just slightly different. And that slight difference might be all it takes. Man, we are rocking. Look at this. Yesterday we were trading up in the well above point of control on the volume profile, which is this line right here, well above that. It just kept on hammering value area high all day. A lot of great trading today. Once again, too many charts open. Okay. I got a lot of chats here I got to read. The 7K on SPX has been there for months. It sure has. We have hit 7K so many times and dropped below. Absolutely. Leviathan FX is asking, how did you link the live gamma exposure levels with NinjaTrader? So, Leviathan, I think you might be new. Welcome to the channel. Glad to have you. Welcome to the live stream. Glad to have you. So what you are seeing here, what you are viewing here is custom code, custom script, and custom C+ that I wrote with a live data stream I got via a free API. I wrote all this code that live streams option flow into a file, and then I wrote code for NinjaTrader to read that, and then this plots on my NinjaTrader chart real time. I'll be making this available on my website, not for free, but not expensive because this is not my day job. As soon as I get my NinjaTrader vendor license approved, so I can be a legitimate vendor, not just some random person selling stuff. You don't have any money right now, but you'll buy the live data later. Sounds great, man. Hopefully these charts will help you make some great trades and you can fire up that money. Sky's the limit for your trading. Okay. All right, guys, give me a second here. All right, Ashley, thanks for joining today. It was fun having you. Good luck in Australia, and hopefully we'll see you tomorrow. All right. Sorry. Real work getting in the way. All right, we got a great day going here. I don't know about you guys, but I get so many scam text messages from companies saying, we're in the area doing free roof inspections. Really? Okay, Leo says, Jason, I've compared your GEX in wall levels to Mentor Q. How close are your calculations to their levels? No idea. I don't know how Mentor Q does it. I looked into Mentor Q, but decided I didn't want to pay all that money to have it update once an hour on my chart. I wanted to be in control of what I was showing for GEX because there's so many different ways to do it. So unfortunately, I can't tell you. That is not a criticism on Mentor Q or a knock on them at all. I'm sure they do absolutely fantastic work, but if you don't pay, then you can't see what they're doing. Because I reached out to them a couple times and asked them, all right, can you explain to me what this is going to look like and how it's going to work, etc. And I never got a real answer. They just kept pushing me off to a YouTube video that I understood, but not really. And then I just dropped it and said, you know what, I'll make my own. And that's what I did. I hope that answers your question. All right. Again, not a knock on them in any way whatsoever. GEX is GEX. George, thank you for that detailed answer earlier. My dashboard has only taken a selection of 0 DTE strikes, 15% plus or minus of the spot. Must be why it changes so much. Yeah, probably. Here, that's a good point. Let's dive into that, George, for a second. Give me 1 second. I don't know about you guys, but I am getting hungry. Okay. George is saying his is only taken 15%. So let's look at SPX right now. It's up another 10 points, man. Give me a second, everyone. All right, George. Let's check out SPX here. This is the full option chain, the whole thing. You said yours takes 15%. So the current spot price is 69.39. So we times that by 0.15. That's 15%. Is that right? That's 1,000 on either side. Let's call it 1,000. So you've got from 68.40 to 70.40, right? So here's 69.35 and here's, now did I do that right? Surely I didn't. How do you, all right, guys, help me out with the math here. How do you take 15% of that? You're probably wondering how I can do anything. Am I just not that smart? Leo, no, I have no idea. In fact, I just got another email last night with another thing I had to change. So late, I was down here late making that change and resubmitting it. I couldn't tell you. I wish I knew. And I don't really want to push them on it. I don't want to ask because they're doing me the courtesy. But hey, help me out on this math, guys. 15%. Do I got to Google this to figure it out? I'll minimize this in the meantime. I might have to Google this. What is 15% of 69.30? 69.40. Yeah, 1,041. So if we minus 1,000 from that, what is 69.40 minus 1,000? 59.40. Okay. Let's go back to this real quick. So you're at 69.40, and if we go to 59.40, 59.40. Doing this right? Where's 59? They only got it. They got 59 something. All right. So George, check this out. Is there open interest below 59.50? Yes, there is on the put side, quite a bit. And then 69, let's call it 69.40. What would that be? 79.40? If we go up, doesn't even go that high. 78. Open interest. Is there open interest on the call side? There's like 8 contracts above that. Doesn't go up that far. But can't tell you that's exactly why. But let's just look. Cannot add all this, but let's call it. Let's call this 1,000, 4,000, 7,000, 10,000, 12,000, 13,000. Let's call that 15,000. 15,000 plus 21,000. Let's round 24,000, 27,000, 28,000. Let's call 30,000. Between those two, 31,000, 32,000. Okay, that's you just missed out on 30,000 contracts, and the gamma starts 30,000 open interest. And the gamma's all 0, so that GEX weight would be 0. But here's what you don't know: you don't know if that decimal point goes all the way out, and you don't know what the gamma was at the beginning of the day unless you looked at that option chain at the beginning of the day. That gamma could have been something, but here now remember what gamma is. Gamma is the rate of change of delta, right? So gamma is the rate of change of delta. But here at 59.50, you've got 0.0031 deltas. So every one of these strikes that have a value, every one of them is going to have a delta exposure. And that delta exposure is going to be a negative value, and it's going to be, it may or may not outweigh the positive delta exposure here on the call side. So we look at this open interest here and these deltas here. So I would recommend using all of them if you want, but I hate to say redo it or whatever, but you're missing out on data. That's what I will say. I'm sure your system's amazing. Okay. And 9103, I'm new to learning GEX walls and using it for day trading. Are there any resources online that you recommend me to go through? Holy cow, man. There's so many resources out there. Literally a ton. Literally. I'll link you to a video of mine that helps. Hopefully you'll like it. You start by watching this, and hopefully this doesn't put you to sleep. Here's a 9103. Here's a video I made about GEX, and it is a non-bias review or non-bias deep dive of what gamma. Ooh, look at this. Did we miss this? Roll down. We did have some VEX drop, but it's a non-bias. This video 9103 is telling you the legal requirements of market makers, what it is that they do, and then the mathematics of how GEX affects underlying price, if that makes sense. I hope that understands. Now, watch that if you want or not. If you just want some regular things to read, man, there's so much stuff out there. I've read a lot, watched a lot of videos. My suggestion would be to read as much as you can and watch as many videos as you can. And then just remember, everything that you're reading and everything that you're watching is essentially designed to get you to buy something. So put your goggles on and try to see through the sales pitch and the hype and marketing, and then, try to understand gamma exposure as best as you can. And don't just watch one or two, watch as many as possible, and don't just do it for one day. It takes a while to learn it. It takes a little bit of time, but man, once you do, you'll be in there. You'll be doing this. Where's Raising Cane today? Remember him from yesterday, our professional poker player? Because he was always raising aggressively. Once you do that 9103, like, you'll be putting all your chips in when you see the right setup, when you see positive GEX, positive DEX, implied volatility contracting, so you know how that's affecting the delta chains across the strikes, and the market maker's got to keep buying every dip. You'll just keep on rolling it over and over. Give me a second. And also, I got a great video on delta exposure, which is the dollar equivalent. Brief. I'm super excited to do this. I can't wait to make the video. Stemmen, is there a way to make the GEX lines thicker so that when they're overlapping with open call wall and other lines, they're still visible? Yeah. At one point, I had these a lot thicker, but then I realized that, well, I need to have them equal, what a tick is going to be for ES trading, because one tick might make the difference. That's why I kept them at this level, at this thickness. And I know sometimes they overlap the line, but you can essentially conceptualize that if it's saying that it's an OPEX call wall and ES0 DTE call wall, that it's clearly going to be a thicker line than the other ones. Now, some other updates I'm going to be making to this is I'm going to be adding some other calculations that show the true weight of what those walls are, because that makes a big difference. And then when I do make this available, I can put in the settings, I don't know, a toggle or a option for you to make them however thick you want. Because at one point I had these 5 points wide, aligning with the strike gaps for SPX. Because at one point I was basically just firing up SPX credit spreads and long and short puts with it. But then I was like, well, kind of hard to do that and trade futures at the same time, so I focused just on futures and did it from there. That's a good question, but that's why they're not thick. I think if you look some of my older videos, I did have them 5 point wide thick here on ES to align with SPX. But I was like, well, you got to have it precise for the ES futures. Let's just zoom out and see what that exposure looks like. I see very little negative exposure, guys, and it's all the way down at 68.80 on ES. Right. Okay. It's 11:11. I got to jump off for a second. I'll be back in a few minutes, and then I'll pick up from there. Happy trading, everyone. It's been great chatting with everyone. I absolutely love it.
Um, I'll be very frank that I thought that we would have a little more of a push to the downside, but the market is saying, hey, listen, if you can get all this stuff that's going on over in the Middle East, if you can clear that up, we're buying. And now it's just a matter of timing. The market wants to go up. And so then you have to kind of pull back and say, okay, let's not be super aggressive here, but the market wants to go up. It's asking for it.
Yeah, the market has certainly been trying to rally even into the close yesterday. I was watching it rally even more. But as we take a look at here, you've got a pretty battered name, at least in the last week, as your first pick here. You've got Cloudflare. They're down more than 15% just in the last 5 days of trading. So take us through this one, Mike.
Yeah, I think that one is a classic panic. And now, and we are looking at coming at earnings not too far away. And so I think that, we tested the lows. They tried to, they were kind of, rallying a little bit. Now we're back into that area where I think that we hold here. I like an iron condor here. Before earnings, so just not this week, but next week, the April 24th, 160, 165, 190, 195 condor. Sell that for 250. That we can make 250, we can lose 250, even odds. I think that we just kind of sit here until earnings. And so let's take that decay and wait, and then that iron condor is before earnings, and then let them figure out what they want to do with earnings after that.
All right, so a pre-earnings play. They've got earnings coming up on May 7th for Cloudflare. But Rick, as we take a look here at the chart, some you can even see it there. Massive volatility we've seen in this name, particularly in the last few weeks here. So walk us through what you're seeing in terms of the technicals.
Yes, a challenging, tricky time for many of the stocks in this space here. Cloudflare specifically has had a big plunge during the past couple weeks here after failing to overtake this resistance level near about 230 or so. Now we find ourselves in a situation where we are dropping below the 181 level, our green line here. If you were to backtrack, you can see it matches up with some old highs and subsequent lows. Now, the 160 area, you can see that was another low point and repeated low point here. That could be on the horizon if the move downward does continue for now. But our blue, steep, sharp trend line does seem for now to have been breached, but price is retreating once again. We're right around that general area here. So a tricky situation for this one, to be sure. When we do look at our moving averages that we follow, one compelling thing that we do see right now is that price is breaking below our long-term 251-day exponential moving average in orange. That comes in right around 184. So if price does recover and stabilize above that level, that would be a noteworthy development. But for now, our short-term 5-day EMA in dark blue trending lower and roughly lining up with that same longer-term EMA, giving us a confluence point to watch. RSI trending lower still, below the 50 midline, but managing to stay out of the oversold area here. And many of the names in this space, it's kind of the general theme is traders wondering if perhaps we're due for a bounce as everything has been so beaten up here. So what we do see now when we look at our volume profile study is we retreated back to where the volume really starts to dry up around the 170, 165 level, and now we're seeing a bit of a bounce back here. 193 is our point of control, our thick red line. So that could be another area to watch going forward to the upside.
All right, and right now, Cloudflare trading lower today. We're down about 2.5%, just below the 180 price mark right now. Now, your second pick today, Mike, also in the software space, not quite as battered as Cloudflare has been, but, caught up definitely in the Sassacre. Although flat today, we're talking about Twilio. Walk us through this one.
Yeah, so what I'm looking at, I do like the bounce off the lows. So I'm not so worried about the downside because the market's telling me not to be worried about it. The market doesn't care what I think. But so what I want to do here is this is more of an IV play. Yes, there is a little bit of a bullish bias to this, but buying a call calendar here, and because we have earnings coming out, excuse me, vol is not all that high, and so I want to play this bullish momentum, but I want to play with the IV time structure here. And I want to buy the post earnings implied volatility. I want to sell the pre earnings volatility, and then I want to get out of this before earnings. So I have a slightly bullish bias to this, but also playing the implied volatility that will hold. It may even go higher. That's only good for us. And then selling up in between there. So a slightly bullish play, but more of an implied volatility play.
All right, so slightly bullish play here for Twilio. Twilio's earnings are coming for us on April 30th. Rick, what are you seeing in terms of the setup here?
Right, so not quite as dramatic as our last chart in terms of the swings, but still quite a notable amount of volatility. 135 is roughly this gap level that we saw right here. So we could see that that was an interesting area to be on the lookout for. Gaps are often worth keeping track of in your trading here. And this white vertical line here, that would be the earnings event coming up. So that would be kind of one of the time boundaries for this general trade here. So when we look more specifically, 138 high points here that we failed at once again recently about a week ago here. A relative low came in at 113, our green line here. Then 105, a repeated low point as well that came back into prominence shortly before and after our last earnings event in mid-February here. The general trajectory here, you could draw a very modestly sloping line going down across the highs or up across these lows. Not really a very strong trend or anything, just kind of trying to describe the general trajectory seems to be narrowing somewhat as we approach our next earnings event here. Now we can see that once again our 251-day EMA in orange came back into focus here. We did have a dip below that level a couple sessions ago, but our price rebounded. We managed to close above that level, and for now it seems to have been supportive still. We have a confluence of our three shorter-term exponential moving averages all coming together between about 124, 125. So this gives us another convenient point to be on the lookout for as a tipping point to the upside or the downside here. The more indicators that you have lining up around the same point, the greater emphasis there is on that as a potential tipping point or pivot point in this kind of trading here. So RSI trending lower still. We are a bit below the 50 midline at this point, but not really a super clear short-term trend that we could make sense of here for this indicator either. So finally, our volume profile study, the big node area that we are finding ourselves within now, about 120 to 133 or so. Those are the points where beyond which the volume starts to dry up. But there's another node just below near 115, kind of matching up with our recent low points. Meanwhile, 105 roughly, our point of control, suggests that the heavy trading area was more toward the downside here. That could be a major supportive area if earnings do disappoint, in some major way going forward here. But things really start to thin out above 135.
All right, above 135 right now. We're at 123.80, mostly flat on the day for Twilio. Now, your last one here, we've got AST Space Mobile. We're moving away from software. Some big name competitors for this company, Starlink, Global Star, but they've got some big partnerships too, AT&T, Verizon, and have performed really well year to date. So why AST Space Mobile, Mike?
Yeah, I was actually looking for the breakout here. And then this morning that Amazon came in and said they were buying GSAT. So, GSAT's gain is AST's loser, but I actually like it a lot more down here at that 92 level. I had to put these together before the open, so I didn't know what was going to happen. But I'm still a big fan of this. Of the sector, and I think that this is one of the blue chip ones in there. I'm a buyer here. Yeah, definitely down at the 92 level.
Yeah, and certainly that Amazon Global Star news, that Amazon's buying Global Star to power its Amazon Leo service.
You forgot to tell me about that.
Yeah, well, I do appreciate you getting your trades and notes in, though, before the show, because I love that. I like being prepared, so I appreciate you, Mike. And, but right now, sending it down about 6.5%, but a better setup potentially for this trade here. So as we look at the technicals, Rick, what are you seeing in terms of this setup, obviously including today's downward move?
Well, I mean, even though we have had a decline since the open, the level at which we find ourselves is rather interesting. 93 is where I had highlighted on our chart already, because that was another of these gap levels here. We did see some fluctuation above and below it, but oftentimes you can find that these kind of can get a little bit messy here, but they still stand out going forward with your trading here. If you look at the closing prices recently, oftentimes we managed to stabilize roughly around that level here. It's also where our big rally paused after that large green candle here. So some other levels to consider to the upside. Around 107 is where we topped out a couple times recently. Up here, 121 is around where we had our best close, 121, 122. Meanwhile, to the downside, we had repeated low points here near 78. We did have one day where we saw a close that breached that level by a pretty wide margin here, but things quickly recovered. So that 78 level stands out as well as a potentially supportive area here. Now we have a situation where our three shorter term moving averages are clustering together here. We have our faster 5-day EMA kind of bouncing around. Meanwhile, our teal 21-day, our gold 63-day look much more consistent in a sideways grind. So the level near 90 or so, 89, 90, 91 roughly, that would be another potential breakdown point if you were more of a bearish outlook, or a supportive area if you were more bullish. So kind of around where we're finding ourselves now today, so an interesting potential inflection point. We can see as well that our green short-term kind of a trajectory line here on the RSI does seem to be getting broken, but we are still above the 50 midline as well. So, not really a clear break one way or the other just yet here. You want to wait till the close anyway before making any notable decisions based on this kind of technical activity. Finally, our volume profile shows 80 to 95 roughly is where we saw heavy trading more recently. We are, after our brief foray to the upside, we're kind of near the upper edge of that boundary. If we were to keep moving upward, 110 to 115 is the next kind of pocket of activity there that you might find some consolidation.
All right, and right now we are trading considerably lower at 92.30, down about 6.5%. But as Mike said, he likes the entry point better even than the setup before the open in the wake of that Amazon Global Star news. Mike, we really appreciate you joining us for Big Three today. Mike Shore, Director of Trading Education over at Prosper Trading Academy, and also Rick Ducator, Lead Market Technician, for being here to break down the technicals. Coming up, we are going to spotlight the company nCino as they bring AI partners into the banking sector. Stay with us.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
My man. Hey! Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class.
We have coaches who have been in the industry and around the industry for a long time.
We have different formats because people learn differently at different times. We have webcasts running through YouTube all day, every trading day.
We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible is that? And it's free.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading 360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Encino, its most recent earnings, and how AI is shaping the banking sector and transforming it. Joining us now to help us do that, Sean Desmond, the CEO at Encino. Sean, great to have you on the show. First, let's talk about your earnings. You delivered really solid growth. Talk to us about what banks are prioritizing right now that's really driving demand for your platform.
Happy to do that, and thanks for having me. The earnings was a high point for us to share our story, which we love to tell. And I think, one of those highlights is the investments we've made in AI and platform innovation are translating into the momentum in our business and the outcomes we're delivering to our customers. We highlighted our financial guidance across every key metric in our business, delivered exceptional results. ACV up 17%. Year over year, largely driven by customers embracing that AI strategy. So that growth is exciting to us. On the commercial side, we had our best sales quarter ever in the U.S. enterprise market in the past 4 years, in fact. We had expansion in mortgage. We had a top 40 bank sign up with our mortgage solution. And we have really strong momentum in our international business, highlighted by continental Europe as well as our Japanese market. So, I think, the imperative here being AI, at Encino, it's operationalized and it's in production at our customer sites. With 500 of our customers have given consent to use our data to inform 170 customers that are already on our new agentic solutions. So while a lot of folks are opining about the agentic future, we're already bringing our customers on that journey here at Encino, and that's what's exciting to me.
All right, I have quite a few follow-ups in there, but first I want to talk about the growth and what's really behind it. Are you seeing a lot of your demand come from further adoption of with existing clients, or are you seeing a lot of new clients driving that demand?
Balance there. We have good, strong, healthy cross-sell, upsell motion in our existing core commercial consumer mortgage business in the U.S. domestic market. And we have nice momentum in new customer signage in continental Europe as well as our Japanese market. So, I think a balanced portfolio across solutions around the things that we do. And when we talk about the things that we do, we talk about onboarding, talk about account opening, loan origination, and portfolio monitoring solutions for our customers and where we do them. And that's across the globe with 2,700 customers to cross-sell and expand while we sign new banks as well.
And Sean, you mentioned that a lot of players are still opining about agentic AI, but you're really putting it into operation here. Walk us through how that actually works for the banks in practice.
Yeah, you'll hear Encino talk about our digital partner strategy, and digital partners are role-based agents in this market where you're seeing the dual workforce come to life, where we have humans working side by side with agents. We have 5 core umbrella partners, so to speak. We have an executive digital partner for the C-suite. We have an analyst digital partner that completes tasks for folks in operations and credit. We have a service digital partner that helps with member relationship management, enhancing the relationship not only at banks but credit unions as well as IMBs. We have our processor digital partner that focuses on workflow bottlenecks and coordinating everything from retrieving documentation to doing calculations. And finally, we have our client digital partner that focuses on our customer's customer. So these agents are working side by side, mining through our LLMs and MCPs all the way down to the data layer to provide insight to customers and meet them where they are.
And Sean, I want to get your thoughts on some of this SaaS fatigue and the SaaS apocalypse. You pull up your company name, you're under the software sector. Obviously, all the names have been caught up in it, including Encino. But what is it specifically that you think differentiates Encino and potentially protects it from getting swept away in the tsunami that is the SaaS apocalypse?
I've heard the term, and we are very convicted, and it's almost serendipitous that we arrive at this point in our journey at Encino 15 years in, because the day I joined this company, I had conversations with our founding CEO that if we could serve up insights with the data that we have access to at the intersection at the time of CRM workflow and analytics, and now across all those things I highlighted earlier, that we would be onto something special. And it just happens to be that there's a new proxy to deliver those insights, and that's AI. And so I talked about our role-based agents, and it feels like this was always the plan at Encino. And the agents are now here, and they're here with Encino. What I want you to really understand, and the market to really understand, is the data trains the models. And we have specific models in our banking ecosystem, like probability of default and loss given default and predictive intelligence models for the right structure of a deal and auto spreading. And you can only inform those models with the type of data that we have access to. And that's important, because if you want to automate your bank on public cloud data alone, that's not a conversation I feel is expressed with a lot of confidence in the C-suites of banks that I talk to.
Sean, it has been such a pleasure talking to you. Taking a look at your chart, you're trading 2% higher today for Encino at 1750, up more than 16% in the last month, thanks to those earnings we talked about. Really been a pleasure. Sean Desmond, the CEO at Encino. Coming up next, we've got our disruptors. As Amazon is acquiring Global Star, Kevin Green will bring us the latest on that news and also have an example trade for us next.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Petalides, host of Opening Bell and the Watch List. Nicole, good morning to you. We're seeing a nice pop in the markets today. Green across the board. I'm looking at the Mag 7 names. Some really impressive moves to the upside there. What's sticking out to you so far in trading this morning?
I think about the 5 weeks of selling that we had in that weekend. I just was rereading an article about the Dow Jones Industrial Average in correction territory. The NASDAQ had already been in correction territory, 10% off the highs, those October highs. And then Everything changed just when everybody was feeling terrible a few weeks ago, 2 weeks ago. Maybe some people, I actually know somebody who sold some stock that Monday, only to see 2 weeks of gains and gains this week. And now you have the major averages positive for 2026. And JP Morgan yesterday and Morgan Stanley were bullish and saying buy the dip and things like that with some caution. And today now you have two more Wall Street titans joining in and saying buy U.S. stocks, and that's Citigroup and BlackRock. So it's very interesting that they're now overweight equity. So there is some optimism here in the market. The other thing, and I know you're talking about Amazon in a moment, is the tie-up Tuesday action that we're seeing, not Merger Monday, tie-up Tuesday. You have Amazon and Global Star. You're going to be talking about that. Oracle and Bloom Energy, and the potential of United and also American Airlines. Some of us remember when United and Continental got together. I mean, in 2010, I remember that so clearly. It was the first thing I thought of this morning. In the meantime, though, stocks for the most part are really catching a bid, to your point, and we continue to see all these banks with mostly good news, higher profit and revenue in Citi, the best quarterly revenue in a decade, new highs. So mostly good news. Wells Fargo's pulling back.
Yeah, mostly good news, but good news for the Mag 7, which we haven't seen green across the board for all of those names. I can't remember the last time I looked at the board and saw green for all of those names, actually, at least in recent weeks. But Tesla having a nice pop today, not our top performer because we've got some really strong moves, Amazon, one of those. But Tesla got an upgrade from UBS. Can you take us through that note, Nicole?
Yeah, I will. And what's interesting is you still have, right now, when I look at the buys and the holds and all that, the UBS call is a neutral up from a sell. It's not great, but it talks about the prospects going forward. They have an unchanged target of 352. Stock's at 360 today. So it's not really a screaming buy. But what it is a bet on the future. And while there's been slow progress in Robo, Taxi, and Optimus, they really see long-term AI opportunities. And that's what they're banking on, because they said also that Tesla trades on sentiment and momentum, not just fundamentals. And so in the near term, the demand has been challenging, and the EV demand overall has been challenging. The energy shortfall, higher costs, some of the higher capital spending that the company's having to do. But the big picture is they're turning positive on what is going forward. I mean, we know that Tesla actually built more cars than it sold and has had some of an inventory pileup. And that brings me to the JP Morgan note, where they have an underweight rating and a 145 target, and they don't love Tesla here. But overall, 46% of the analysts do have a buy rating. They have a $405 target. That's the average. It's a 364. 15% have a sell. And I haven't heard anything more than last week when we talked on April 9th about maybe a new EV, right? And some sort of SUV EV that was going to be a little shorter, a little more affordable. We haven't heard anything from that. That came from Engadget that day.
Yeah, certainly, Tesla, while it's debating if it's an EV company, an AI company, what its future looks like, of course, SpaceX in play with all of this as well. There'll continue to be disagreement, but always fun to cover. Nicole, we appreciate you breaking down those notes for us, Nicole Petalides. Now it's time for the disruptors. Kevin Green, our senior markets correspondent, here to talk about a different Mag 7 name. We're talking about Amazon acquiring Global Star for $90 per share in cash or shares. Now, KG, this is a pretty big deal here, a huge name going to really help power Amazon Leo. Take us through this news.
Yeah, this deal is actually valued at around $11.5 to $11.6 billion. And as you talked about, it's around $90 per share for GSAT. And those that are actually holding the shares could either elect for the $90 cash, or they could actually get paid out in shares of Amazon stock of 0.321 shares per share of GSAT. Now, this acquisition obviously is a strategic move, especially when it comes to Amazon Leo and allowing their ability to have direct-to-device satellite capabilities. And so Amazon's going to basically take over Global Star's constellation network, and they're also still going to provide services to Apple as well. Global Star is providing constellation services for Apple, especially for the SOS type of services, the emergency services, being able to text if they're outside of cell phone range. Those services are going to still be remain intact with this Amazon deal. So they're trying to battle it out and try to be competitive when it comes to SpaceX. And we've heard a lot when it comes to the broadband space, especially when it comes to these satellite networks. The U.S. government's also spending a lot of money as well as resources and looking at trying to expand these networks over the long term in order to try to, once again, kind of provide more connectivity for U.S. citizens. So very interesting acquisition. Not that expensive when it comes to Amazon's pocketbook here, but something that's a little bit more revolutionary when it comes to their portfolio management.
Yeah, certainly. I saw a note from Roth Capital come through just while we were on air here saying that they believe this is Amazon positioning itself for a broader connectivity plus services platform, which, as you just pointed out, some heavy competition in this space. But when your pockets are as big as Amazon's, perhaps not a bad place to spread your wings into. But KG, I'm looking at Amazon here, and while we've had quite a bit of volatility in the last month, they're up almost 20%. Year to date, still in positive territory here. So as you would look to trade this name here, with this pop to the upside here, about 3.5% today, for example purposes, how might you structure a trade for Amazon?
Yeah, well, if you're a long shareholder and you want to try to lock in or maybe hedge some of the position here, my example trade is actually a little bit more bearish because there are some gaps to the downside, and the stock has moved very aggressively off the lows. So looking at the April 24th, 245 puts, buying those outrights for $4.20, they're going to be a little bit cheaper now, given the fact that the market continues to move to the upside. But the max loss on this trade is going to be $420. With a break-even point of $240.80. Max profit is if this stock goes to zero at $24,080. But once again, this is looking for a little bit more of a retracement after this really heavy acceleration of the upside when it comes to the price advance for Amazon.
Yeah, right now Amazon trading at $248.29, again up 3.5% on this news that it will be acquiring GSAT to help power its Amazon Leo platform and continue its deals with Apple. KG, thanks for being with us today for Disruptors. I'll talk to you again later on Market on Close. That was Kevin Green. Coming up next, it's time for our 360 round. We'll go through the earnings from Johnson & Johnson this morning. Stay with us.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round to take a closer look at Johnson & Johnson. The healthcare giant reported a 10% increase in sales during the first quarter, also increased guidance for the year, expecting sales of $100.8 billion compared with the previous estimate calling for $100.5 billion on adjusted EPS of $11.55 compared with $11.03 prior. Let's bring in our panel to dive into the numbers. Joining us, Arthur Wong, Healthcare Managing Director at S&P Global, and Andy Wong, Managing Partner at Runnymede Capital Management. Great to have you both with us. Arthur, we got some really nice numbers from Johnson & Johnson today, but a pretty muted reaction to the upside here. What are some of your takeaways from the report and the price action we're seeing in response?
Yeah, I think with the expectations, it's within the expectations, even though they raised their guidance. I think investors were expecting this level of performance for this quarter and going forward as well. So, and I think what really was impressive from this quarter for us is really the multiple growth drivers and diversity within both of its innovative medicine and medtech divisions that will really give us comfort for continued growth for this year and well beyond.
And Andy, what stuck out to you most in the report?
Yeah, I think that this is a company that is executing through a patent cliff really well. If we start with Stelara, sales dropped 60%. That's the headline. But the real story is what's happening underneath. Stelara lost patent protection, and instead of losing patients to biosimilars, J&J is migrating them to its own next-gen drugs. Tremfya beat expectations by $400 million, and they just got FDA approval for Icotide, a new oral psoriasis treatment. This is exactly how you manage a patent cliff. You cannibalize yourself before competitors do. And zooming out, this is their 5th straight quarterly beat that suggests that it is not a one-off, it's execution.
And Arthur, as you look at some of the drugs that they're putting out here, Andy just highlighted that, yes, Stelara lost its patent there, but the customers are still staying within the Johnson & Johnson ecosystem. What is that saying to you about their long-term growth and the pipeline that they have moving forward?
Yeah, no, it points out that they've been able to continue to maintain the patients, but continue to invest in their pipeline and to identify and have that follow-up drug available and ready to come out before their drug loses patent expiration, so they can get a jump on transferring the patients over. And of course, the drugs have to give a additional benefit as well, right? From safety or efficacy or just convenience standpoint, and they've been able to execute on that across multiple products.
And Andy, oncology drugs were driving a huge upside in these numbers. From your viewpoint, how sustainable is that growth trajectory for Johnson & Johnson?
I think it's quite significant here. If you want to understand J&J's growth, oncology is the place to look, specifically Darzalex. It generated $4 billion this quarter versus $3.4 billion expected. That's a massive beat from a single drug. And at this pace, it could exceed Stelara's peak as J&J's top product. At the same time, you have Carvykti, its CAR-T therapy, that grew over 60% with new FDA approvals expanding its use. So I think the shift is clear. Immunology used to drive the business. Now oncology is the engine and increasingly the future.
And Arthur, as we take a look at oncology, it's expected to become a $50 billion franchise here. What's the biggest catalyst for J&J to get there?
I think in terms of just continuing to execute on, in terms of finding those patients and transitioning over to their new generation products.
And Andy, as we look at large cap pharma right now, we're getting lots of headlines from big names, from small names about seeking FDA approvals, clinical trials, things going right, things going wrong. As far as J&J and looking in the large cap space, where do you view them? Are they one of the cleanest stories? Are they in the middle right now?
Yeah, I think investors are going to have to make that choice whether they want a large cap pharma name and then balance that with smaller cap faster growers. But I think investors appreciate J&J's portfolio and how diversified it is. They have more than 28 products generating over $1 billion each. That's across multiple therapeutic areas, and that breadth matters. So when Stelara drops 60%, the company can still grow revenues nearly 10%. Most pharma companies don't have that cushion, and I think that it gives J&J the flexibility to invest in R&D and take bigger risks because they're not dependent on one or two drugs.
And Arthur, last question to you, and we're a little bit tight on time, but I see you have a AAA rating on J&J, but do you have any concerns about their ongoing litigation over their talc product and how much of an overhang that presents for the stock?
Yeah, I think investors will have to get comfortable with the fact that there will be periodic headlines coming out of there. I mean, the talc litigation, they've been frustrated. J&J has been frustrated in their past attempts to try to bring closure to it. There's still a large number of cases remaining. And I know they had a setback with the Dalbert hearing late last year, but I think J&J continues to prevail in an overwhelming number of the cases, whether initially or on appeal. And I think these cases, even though there's a lot of them, it will take time. And I think given J&J's expected continued strong performance their ability to absorb any impact of any potential future settlements is well within the current ratings at this point.
I really appreciate you both joining us today to take a closer look at J&J, trading up about 0.8% higher right now at 240.06. Arthur Wong from S&P Global and Andy Wong from Runnymede Capital Management. Also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. Stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab coaching is concepts brought to life in the real world.
Schwab coaching is learning constantly.
It's relatable, it's practical,
clear, understandable,
and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange and Wall Street, adding to its gains today as investors look towards an off-ramp to the war with Iran. Let's get right into a check of your scorecard as we hit the lunch hour on Wall Street. The S&P 500 right now rallying about 1%. You've got communication services followed by consumer discretionary and information technology at the top of the leaderboard in terms of sector price action. The Dow right now gaining more than 0.5%. NASDAQ 100 up 1.25%, touch above that. Russell 2000 is the belle of the ball, rallying almost 1.5% right now. Here's the roadmap for today's show. We'll look at example option strategies for ASML. It's got earnings coming out. Plus, the team from Likefolio will be along with new sentiment data on DoorDash. And back to banking we go with Morgan Stanley on our radar ahead of its results due tomorrow. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You've got Tom White in our Chicago studio and Kevin Higgins joining us live from the CBOE. As you know, we've got you covered from exchange to exchange and beyond. So we've got Wall Street higher right now, still keeping a close eye on the latest headlines around prospective talks between the U.S. and Iran. It looks like there is negotiating happening or about to happen further. From the looks of oil prices, we're approaching $92 a barrel. It seems like the view is that there will be progress. Tom, how do you read the tea leaves?
Yeah, the optimism continues here for risk on assets. You're seeing that in equities today. I mean, the S&P 500 now 0.7% away from its all-time highs. You know, we've made up all that ground from the start of the war as far as the slide that we saw in equities. So that's a positive. There were some comments. President Trump to the New York Post stated that talks could be happening over the next couple of days. I think that's the optimism that's built into the equity market that, hey, we'll get some deal before the ceasefire ends, and that'd be a positive for risk on assets. And then you throw in the fact that, you know, you've got crude oil down 6.5% today, back near the $92.50 a barrel level. That's a definite bonus. But you also throw in the blockade that the U.S. started. There's been reports that they've turned away multiple ships, and maybe that's going to cause some consternation from Iran, where they're willing to come to the table and maybe push back against maybe some of the hardline notes and bullet points that they had in the latest rounds of negotiation. So that would be a positive also. But yeah, I don't know if it's a head scratcher that we're rallying as much as we have and that we're back to these levels as far as the benchmark S&P 500, but the optimism's definitely there, and maybe earnings might be the you know, the next leg up here for equities.
Yeah, a lot more green on the heat map today. Kevin, what's your take?
I think this is just a further, you know, the risk is coming out of these markets. You see a VIX 18. It's interesting. Forgive me that I go back to my futures trading days. The front expiration crude oil is really down a lot more than the back months. The front month is down 6.5, almost 660. But remember, I kept talking about 130 days out, how it was not up as much. Well, it's only down about 2 points in the September contract. So what's happening in the crude oil markets are the spreads are coming in, right? The risk premiums getting taken out of the front expiration that's only got 7 days to go. The June expiration is trading only just below $89. So those spreads that, remember, I was talking about was $20 wide is only $12 or $13 wide now. So what's happened? Two things. Crude oil's coming down, but the front month is coming down faster than the back months. It's the stuff I love to watch, Diane, but most of all, the overall risk premium and tension as we go into earnings is really starting to come out of this market. Like I said, an 18 VIX, we were a 31 VIX. And so a lot of risk premium coming out of these options, Diane.
Okay, all right, let's get over to the banking sector, you guys. There's a bifurcation in reaction to the latest results from the banks. You got thumbs up for Citigroup. That stock continuing to add to gains, up 2.8% right now. Let's do a check of JPM. Little change, off just 0.5%. Wells Fargo, meantime, is lower by 4.75%, though off of the lows of the session. They didn't like those results. Tom, what's your take when you look across the banks?
Yeah, I think the continued outperformance of Citigroup, Jane Fraser doing a great job with that bank. Net interest income came in above expectations. That was the, you know, the kind of shining star for that report, and it's why the stock is hitting more 17.5-year highs in today's session, up 2.75%. JP Morgan, you know, they didn't put aside provisions for credit losses as much as the street wanted. But then, you know, you've got Jamie Dimon commenting on the economy as a whole, what could possibly happen. But then you look at Wells Fargo, they missed on revenue. That's, you know, a dent in their earnings, and that's why you're seeing the pullback in those shares. But you got to remember, guys, you know, out of these, you know, two stocks, JP Morgan, Wells Fargo, they were just at all-time highs at the beginning of January, just like Goldman Sachs. We talked about that yesterday. Maybe it's a little bit of profit taking. Maybe it's some consolidation before maybe the next leg up. They weren't bad reports, maybe besides Wells Fargo at this point, but this is a good stepping stone, I think, for the earnings season, where they're at the front line of what the consumer's doing, and they're still seeing pretty robust growth here. And does the economic environment with interest rates where they are, yield curves where they are, beneficial to these these companies moving forward? Now, the IMF did come out with a report today and lowered their growth estimates for not only domestically here in the U.S., but overseas also, just a little bit due to the conflict in the Middle East. But that didn't seem to have any negative impact on what we're seeing out of the banks. And you know what? 2/3 of this quarter were already built into these results. Maybe you start looking at guidance maybe next quarter for some of these banks. But I think this is a good sign for corporate earnings. Can we have another above average expectations? Because I think the growth rate for the S&P 500 is supposed to be 13% here for the for earnings, and maybe that'll come to fruition.
So are we on our way back to new highs? Kevin, your take when you look at the banks.
Yeah, Wells Fargo, a little disappointing in the revenue numbers. Jamie Dimon did guide for lower net interest income. Well, if you think interest rates are going to come down the second half of the year, you may be doing that. I think a win for these banks are holding the current levels, like Tom mentioned. They've had great runs. Their valuations are a little pricey. So if they can hold these levels with an earnings report, it's a big plus. And, the transformation of Citigroup, Jane Fraser doing a great job bringing that company, getting all the losing parts of the company out and getting it on the right track. Yeah, Jane Fraser doing a great job in Citi. That's an ugly job to transform a company like she did. So all things considered, I think if banks hold these levels, it's a plus for the start of earnings season. Wells Fargo has it. Goldman, just a little. Like I said, JP Morgan, just a flesh wound, Diane.
Okay, just a flesh wound. Let's turn to the skies. We got shares of American Airlines flying higher, up almost 9% right now on reports that United Airlines CEO floated the idea to government officials of the two air carriers merging. This is very curious to me, Tom, because I just can't see. I know this is a government that would be more friendly to, kind of M&A activity, but we're talking about two huge airlines. Tom, your take.
Yeah, two of the three biggest, and it would create the biggest here domestically. You know what, guys? I'll put a pin in this, and this is just my opinion. Nothing's guaranteed. This isn't going to go through. The regulatory environment for two of the three biggest carriers to unite. I think this is, the new administration. Transportation Secretary Duffy admitted that maybe there would be, some M&A activity within the airline space. I think they were probably going back to maybe some of the consternation and flux that we saw from the Biden administration when they pushed back against the JetBlue and the Spirit and all that mess in the M&A space at this point. But I can't imagine these two being able to get through the regulatory process to join forces. Now, Scott Kirby going to the the White House or with the administration on February 25th made that clear. It's like probably just reaching at straws, because what they want is the international business to compete more on that those routes, right? But I don't know. I think if you look at it, part of the reason that we're seeing the rally in UAL on this news, 4%, is the fact that crude oil is down 6.5%. And, American Airlines up 8-9%. Maybe that would be up 3-4% with the rally that we've seen, but it's because of crude oil getting hit right now. So my thought is that, hey, they can explore this all they want. I just can't imagine in any scenario where they would allow this to go through, because you know what it means? It most likely means higher fares for everybody.
Great perspective there, Tom. Yeah, I can't see how. I feel like it would be an uphill battle as well. Kevin, your take.
New administration, new ideas when it comes to mergers and acquisitions. And remember something, it's a couple things. Go back to Ed Bastian's comments after their earnings. He said a lot of major carriers don't make money. Who was he referring to? look at the balance sheet, look at the issues that American's having. It may help American to get taken over or merged with a company clearly with a healthier balance sheet and doing better in United or Delta, frankly. But American is got that key Dallas-Fort Worth hub. They've got all these new planes, but this is a company with an ugly balance sheet, and that's why the stock can't move higher. I think it's ambitious. I think it's aspirational, but it is not out of the question. Remember, Ed Bastian basically hinted to this in their earnings report. So I think something big is going to happen in airlines. They have to compete. The U.S. carriers have to compete with the international players in those international markets. And I think if you create this massive airline, you can do that. So I don't think it's not a high probability, but it's not off the table.
I hear you that it's not off the table. It sounds like they're certainly exploring this. I do think it would be an uphill battle. Like, I agree with Tom's thought on that, especially when you think about the consumer focus and this being a midterm year. But let's talk Amazon. So Amazon is inking this multi-billion-dollar deal to buy the satellite firm Globalstar. We know that's a competitor to Starlink. Shares of Amazon are moving higher amid this news. But Tom, I'm curious. So we're up about a little bit more than 3.5% for Amazon. It feels like this is more about the broad market, though, for the Amazon move, but your take?
Yeah, this is all about catch-up at this point and not the condiment. This is playing catch-up to what SpaceX has at this point, because if you think about it, SpaceX already launched over 10,000 satellites. Guess how many Kuiper, and now it's called LEO, has launched? 241 as of April. So they're trying to play catch-up by buying, Globalstar at this point, and creating that spectrum, creating their outlook for moving forward for launching this competitor to Starlink at this point. So they're playing catch up at this point. $90 a share. I mean, $14.5 billion, I believe the total, or $11.5 billion roughly was the total that they're spending on this. But I think this is a way to start to play catch up in this space. And, this is, I think, one of those unsung things that we've talked about with Tesla and SpaceX and Starlink is that, hey, Elon Musk is trying to create this ecosystem that's going to be, battle tested for what we're going to need technology-wise in the future. And I think that's what Amazon realized, that, hey, internally we're not be able to play catch up the way that we want to. Let's spend some money. Let's invest. Let's disrupt this area and compete on a more level playing field at this point. That's got to be the reason for this takeover.
So this is like another ecosystem thing, the Amazon, Globalstar, Blue Origin, when you think about all of that, trying to keep up with the Joneses, meaning the SpaceX and Starlink. Kevin, your take?
Trying to keep up with Elon Musk is an expensive business, guys, because he is several steps ahead. Tom mentioned the numbers, but here's one little thing that no one's really talking about. Apple owns 20% of Globalstar. So that could be interesting when these negotiations happen. So who knows how it'll play out, but definitely Amazon paying to try to keep up or catch up to Starlink.
Doesn't seem like the street minds it, at least in terms of investor reaction today, with shares of Amazon up about 3%. We'll see how Amazon continues to move throughout today's session. But let's put a pin in it, guys. We've got bull versus bear coming up. The guys will get their example trades put together for ASML ahead of its earnings report. That is due tomorrow morning. We've got more fast market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. ASML is in focus ahead of its earnings due this Wednesday. Now, the stock has been on quite the tear this year, up more than 40%, hovering near all-time highs. Wall Street is projecting that earnings will grow about 12% from a year ago, and that revenue will top $10 billion when converted to dollars. Now, keep in mind, the Dutch chip equipment giant is the only company in the world that makes the most advanced lithography machines used to produce cutting-edge AI chips. Investors will not just mind the numbers, but hone in on management's tone on future demand from customers like Taiwan Semi and memory makers riding the AI boom. All right, time now for the tug of war on ASML. For that, let's welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. So before we get to your example trades, got to get your thoughts on the Dutch chip equipment giant. Kevin, I'll start with you. Your take.
Semiconductor leader, industry leader, riding the wave of AI chip for demand. This is a company doing all the right things. However, where the stock is right now and what they're projecting, this quarter and the quarters going forward are all going to be about margins, gross margins. They're expected to be for this quarter between 51 and 53%. That's down from 54%. So margins are coming in. Now, they claim they're going to be 57% by 2030. But with the valuation of this name, any weakness, like a drop in gross margins, could hurt this company. It's growing about 14 to 15% in revenue. Earnings are growing about 13%. But watch for the gross margins. That's the number I think the street will really be paying attention to, Diane and Tom.
All right, Tom, your take.
Extreme ultraviolet lithography. They have most of the market share, if not all of it, at this point. Their customers, right? Taiwan Semi, SK Hynix, Samsung, Intel. They're printing, this stuff, uses these ASML machines. And think about it, the high-tech ones that they're selling the most of, 350 to 400 million per machine that they sell. They had a backlog of over 38 billion euros last quarter. So demand is there. It's outstripping supply at this point. And think about this, guys. One of the things, because the stock's just below all-time highs, they continue to do well, probably charge what they want, is that as we get more into maybe competitive pressures within this space, whether it's maybe TPUs getting developed, Broadcom using maybe these machines in the future, and everybody trying to make their own silicone. So what kind of footprint does that rely on for ASML, right? Where they can maybe expand from maybe those 5 big customers that they have on an annual basis. That might be, a growth area. But as Kevin mentioned, it's going to be about gross margins. It's going to be about backlog. It's going to be about the environment moving forward. Because if you listen to maybe some of the memory chip makers, they just don't have enough supply. What do they need? They need ASML machines to up that supply as they're building out these facilities globally, whether it's in Taiwan, whether it's in Korea, here in the U.S. So that's going to be a benefit for ASML, but the stock has moved up pretty significantly over the last couple of years.
All right. Yes, that is certainly true. So let's get into the example trades. Kevin, we'll start out with yours. What's your approach?
So my paper money trade is just moderately bearish. just because of the valuation, just because gross margins are going to be really under the microscope, and this stock has run a long way. So I looked at the expected move of around $80. No, that's not a typo. It's a $79 expected move. So I looked at the 1 week, buying the April 24th, selling the April 17th, just a 1 week 1440 put calendar. So about $75 is where it was, about 75, it's almost $80 now where it was. So a put calendar below the market, we were looking at about 11.35. It's actually a little higher now. It's actually, the price has gone up to somewhere 11.90. Careful about liquidity here. Careful about price discovery on some of these spreads. So it's trading somewhere between 11.5 and 12 bucks. But I'm looking for a move slightly lower, down towards that 1440 range, Tom.
Yeah. And you know, just looking at this, the price of a calendar, sometimes we talk about other stocks and you can buy a calendar, 1 week wide calendar for 50 cents or 30 cents. This one's roughly trading about 12 bucks. We've got about 11.35 here on the Analyze tab here. But let's break it down. April 24th, weekly options that expire in 10 days. Buy that 1440 put. Sell that same 1440 put in the near term. April 17th, options that expire in 3 days. 11.35 debit. The debit you pay is going to be your risk. And as Kevin mentioned, price discovery warranted on this. The bid-ask spreads on the individual options are really wide at this point. So the midpoint might show 12 bucks. You might be able to buy it for 11.50 or 11.35 as we've got here. So keep that in mind. But that is your risk, $1,135 per spread. You can see the apex of profitability at or near that 1440 strike. That's about 55 or about 60, 75 bucks below, 80 bucks below the current share price. So it lines up with that one standard deviation move, but you've still got a range. And you could probably put a range on it of between about 1380 on the downside, maybe 1510 on the upside, that you could be potentially profitable on this one. And one of the key things with Kevin's example trade, that 1440 put that you're selling in the April 17th monthly options that expire in 3 days, which is 65 or 75, 80 bucks out of the money to the downside, that's still worth $18 of option premium, and it's that far below the current share price in there. So while you're looking for the 1440 line that aligns with the one standard deviation move, you still got a nice wide range for this to be potentially profitable, but you do need a slight move to the downside on this. And the vol dispersion that we talk about, you're buying about a 62% implied volatility on aggregate in the April 24th weekly options on that 1440 put, selling about an 85%. So that does lower the price some, but a lot of option premium in those near-term options with the expectations of a plus or minus $80 move in the shares. Kevin, I went a little bit more passive on this one and maybe a little less risk on it also, where I just looked at selling something that's neutral to bullish here and going a little bit outside that one standard deviation move. So April 17th, monthly options, really short-term positioning, earnings type example here. Sell the 1420 put and then buy the 1410 strike put. So $10 wide short, neutral to bullish put vertical, paying or collecting roughly about a 220 credit on this spread. That's what you can make, 220 bucks with 780 bucks in risk on this trade. Takes your break even down to 417.80 to the downside, Kevin. But the thing that kind of stuck out to me on this out of the money passive trade is that the probabilities are really high on this one, which is why you've got 780 bucks in risk to only make 220.
Yeah, exactly. It's really amazing the levels of premium still in these. We talk a lot about some names just don't have big levels of premium. Can't say that here. These are aircraft carrier like premiums on some of these options. So big levels of theta, or in Tom's case, you can move that short strike way down and still collect $2.20. And Diane, if this stock were to go right to 1440, both spreads are profitable.
Okay, 1440. That's a number to pay attention to there for both of those spreads. Great stuff there. We've got cash tags coming up. The team from Likefolio will be along with the latest sentiment data on DoorDash. Those shares have been under heavy pressure year to date. The stock is catching a little bit of a bid today amid the broad market momentum. But we'll see what sentiment looks like right now. Keep it right here on Schwab Network. Fast Market. We'll be back after this break.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on the Schwab Network. I'm Diane King Hall alongside Kevin Hincks in our Chicago studio. Time now for our cash tag segment. For that, let's bring, Kevin, you're at the Seaboat. Kevin, I need more coffee right now, clearly. Let's bring in Landon. We got Landon Swan, co-founder of Likefolio, joining us to take a look at DoorDash today. And maybe I need to order some DoorDash. Maybe I need lunch right now. All right, let's go through the latest sentiment data you all have right now. It looks much stronger than I expected, especially when you think about how the shares have performed. But walk us through your latest data, Landon.
Yeah, I mean, we'll bring up this chart here in just a second, but man, when you see it, it's like this is one of those divergence opportunities. And we've been tracking this company for a while. Obviously, they're the leader in delivery services, that last mile delivery, and they've done a great job of expanding outside of just restaurants. They're in grocery, they're in retail. They just got a partnership with Lowe's and Sephora. So they're in a way sort of trying to compete with Amazon, where you can get anything you want and get it very quickly. And so obviously you can get things even more quickly with DoorDash than you can with Amazon. Amazon's got a little bit better logistics setup, but still, that's the idea. Is if you want something now, we'll get it for you. Pick it up, whatever it may be, food, groceries, retail services, things like that. And they just completed their integration of Deliveroo out in Europe, so that they're not worried about fragmented legacy systems. So they've got that going for them. They've been focusing not so much on market share acquisition, but the long-term economics of getting order frequency up, getting basket size up, getting profitability. And really, I think the key is they just need more stops per drive. They need to have these dashers, picking up several orders where they can hit 1, 2, 3 in a row instead of going back and forth. They need to be more urban instead of rural. There's just different ways to get them more profitable. But the good news for investors is they are by far the leader, and they're continuing to expand their lead. We've got, if you look at the competition here, they're at plus 57% on a year-over-year basis, and that's off of high numbers. That's off of basically all-time highs, and so they're continuing to push the all-time highs, beating everyone else in the space, even if they have great partnerships like Ship does. And so, they are by far the leader in this. And what's interesting, when we look at the stock price chart versus the web visits, which is a huge indicator for DoorDash for us, it tells a tale of Likefolio strongly disagreeing with the market. The stock was at 285, which was coming off the heels of some very strong data. And then it's been, took a turn down, basically got cut in half down to like the 143, somewhere in there. And it's since bounced back up to 163. But this chart is interesting because so you got the blue line of the Likefolio data, the dotted line of the stock price, and that bump after July of 2025 on the blue line, that doesn't look high, but at the time that was an all-time high. And so that, for us, justified that very high price target of 285. The stock has since moved down sort of with that data, but now they've crossed significantly where we're seeing the usage data, not to mention the happiness data. This is not charted here, but the happiness data is off the charts as well. People love this service, and the stock has pulled back significantly. So we see this correcting one way or the other. Either the markets know something that we don't, where people don't really like DoorDash as much as they say they do on social media and their usage of the apps and the website, or markets are going to figure out, hey, you know what, this company is dominating and they're moving in the right direction towards significant profitability, and the stock price is going to catch up. I don't know if we'll hit 285 again over the next year or two, but I do think at 163 they're currently undervalued.
Hold on, Landon. I'm just finishing up my DoorDash order to get Diane some caffeine. But after that, I want to get to you and ask, this is a company, Landon, that is now in the marrow of local commerce, right? More people using it more often than they ever have for food delivery. Now they keep expanding. Why did they take half the value out of this stock, Landon? Is it the valuation? Is this just a mature company that's eventually going to trade at a lower multiple than it did when it was growing? Because it is still growing, but your divergence in the attitude versus the stock price, or the uses versus the stock price, this is one of those screaming data points that when Likefolio brings these, something positive usually happens, Landon.
Right, and I think the only really logical argument is just like you said, it's valuation. It was priced for incredible growth, and maybe the growth has slowed, and maybe this is just a PE ratio kind of issue. If that's the case, it's going to grind higher over the next several years, and I think investors will be moderately happy with that. But if this is a case of underestimating the dominance in the space and the potential growth in the future, I think that we could see sharp moves to the upside. And when you think about it, once they got out of pure grocery, pure restaurant, they got into grocery, they got into retail, they start adding more and more and more, that's going to have an exponential effect, because you're going to, as a customer, you're going to start thinking about getting other things along with your order. You're going to start in your head saying, well, I'm not going to go pick up food, I'm going to have that delivered, but you know what's on the way? I would have stopped here and I would have stopped there, so maybe I'll just add those to my order as well. And that's what they're doing. They're getting people, they're changing the mindset to bring it to me, right? Whatever it might be, whatever someone could walk in and buy very easily for you on your behalf, now they can just do that as a service, and it's not just food anymore. And so I think that mentality shift is really starting to take hold, and they're laying the groundwork for that. They've got about half of their users on the Dash Pass, which offers significant discounts, and all of those people who are on that use the service obviously far more, and they're starting to try more groceries, try more retail. And as people continue to expand how they use the service, I think with the additional retailers out there, it's going to have, like I said, that exponential effect where it's going to grow at an increasing curve, where people start to add more and more to their orders. And then what happens is the per stop cost goes down significantly. When a driver is, instead of driving 10 miles round trip for one order, they can get 5 or 6 orders, maybe a couple to one house and 2 or 3 to another house. Then all of a sudden the economics start working out even better, and they can make it cheaper for the end user, which makes it more attractive. And again, that's sort of a flywheel that's going to happen, and the exponential demand is going to increase. So we're seeing the groundwork being laid for a lot of usage on this, and it's backed up by consumers saying, I'm using this a lot and I love using it, which is it's a recipe for success.
So, Landon, let me ask you that, like that. I know the pun wasn't intended, but I like that one there, especially when you think about the connectivity to food, obviously, for DoorDash. It looks like in terms of the competitive landscape, this is not an intended pun, that it is eating the lunch of its competitors. Is that an accurate assessment from what your data shows?
Yeah, it is. I mean, it's been the leader for a while, and for it to post that number, that plus 57% as the leader, that we don't see that very often. Usually what we see is a really small company posting big numbers. They're coming after the big guy, but this is the big guy, and it's expanding its lead. So I think that it's a stretch to say that they have their targets set on Amazon, but that's kind of the mentality that they're taking, is whatever you want, we can go get it for you, and we can have it delivered very quickly. So they are the leader. They're expanding their lead, and yes, they're definitely eating their competition's lunch at this point.
All right, thank you, Landon. Great stuff. That is Landon Swan, co-founder of Likefolio, with the latest look at DoorDash. Now, this is one of those cases. Let's bring Tom back into the fold here, Kevin. So this is one of those cases where there is a big divergence between the Likefolio data and the share price here for DoorDash. This is really interesting to me. And I wonder if some of that has to do with the worries about the consumer. But I wonder if, as long as the job market holds up, DoorDash will hold up. Tom, your thoughts before you guys get into the example trade.
Yeah, I think that divergence is key here, because the stock is down about 42% from those all-time highs that we saw in in late fall. So that's probably why you're seeing it. It's right at this 50-day simple moving average, which might become resistance at this point. But then you look at the partnerships that they have, whether it's Walgreens, Albertsons, CVS, McDonald's, Kroger, Family Dollar, Waymo. That's the key, I think, as they've got a majority of the market share within this space. But Landon also mentioned valuations might be the reason that it slid. Well, this stock's trading at about 55 times forward PE for the coming year. That's expensive. Trailing's over 75 times. So that's probably why you've seen a little pullback in the market. And then you throw on top of it, Diane, what you mentioned, which is maybe, the consumer and concerns about slowing, growth there from the consumer. But that being said, stocks rebound a little bit, about 9% so far this month. Kevin, on this one, you've seen that pullback. You got their data. How do you want to look at this one from an example trade?
So I'm going to do something we don't do too much, and that is a very short-term unbalanced butterfly, keeping it in this week's expiration because it's got such a small expected move. If they come out with news that is representative or shows the data that Likefolio has, there could be a significant jump in this stock if the news is good, because they've beat the stock up pretty handily. So what I looked at, Tom, is something in the just this week, April 17th, unbalanced butterfly, where I'm buying the 162.5 call. I'm selling 2 of the 170 calls. So a little bit higher than the expected move, which is about $4.50. I'm going, a couple dollars higher than that even. And then I'm buying the 172.5 call to make that unbalanced butterfly. It's trading about $2.80. It was trading $2.90. But again, what I noticed about this name when pricing the options, markets are wider, frankly, than they should be, Tom. And so it's a little bit illiquid, and you really got to do price discovery on these spreads, especially on something that's three-sided like this. So don't be afraid to put it in at a lower price and let it sit there for a little while and then work it a bit higher, Tom, because that's the key to get this on as cheaply as you can. It's got a nice remember, if it goes to 170, you've got a nice triple on your hands, something close to a triple, but make no mistake, this is a directional play that flattens out in profitability if it were to go through 172 and a half, Tom.
Yep. Yeah, let's break this one down. And we did have the unbalanced call butterfly here, where we're buying one of the 162 and a half strike calls. That's been in the money by just over $1. Sell 2 of the 170 calls. That's where you want the stock to go over the next 3 days. And then buy one of the 172 and a half strike calls. So unbalanced broken wing call butterfly to the upside, paying roughly. We got 250 debit. That's where it was trading earlier. It's a debit. It's probably trading closer to 270, 280 at this point. But the debit you pay is going to be a risk. So if you pay 250 debit for this, takes your break even up to 165. That's 0.8% above the current share price, and you have 3 days in this position. Kevin mentioned the fact that the one-day standard deviation move is about $4.50 plus or minus, right? To the end of the week, the plus or minus one standard deviation move into expiration for this example trade, $7.60 either way. So that kind of sets up, if you get that $7 move to the upside, that's right in the apex of profitability for this position, as you can see, at or near that 170 strike. But this is one of those strategies we always talk about, that on butterflies like this, whether it's an equidistance butterfly or like this example where it's a broken wing call butterfly to the upside, they start to expand in price rapidly as you get closer to expiration. So that might be a benefit. You do need a slight move to the upside, less than 1% to get above that break even though. And as Kevin mentioned, even above 172 and a half, it's still nearly a double in profitability on this type of trade. But a bullish look, setting up with like Folio's data here, Diane.
Good stuff, guys. Thank you. We have got the breakdown coming up. Kevin Green will join us to take a look at Morgan Stanley ahead of its earnings, which are due tomorrow morning. That stock moving higher alongside the broader market. Fast Market will be back after this break.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check of where markets stand as we get closer to the bottom of the lunch hour on Wall Street. The S&P 500 adding to its advance, higher by more than 1% right now. Dow's got a gain of a touch more than 0.5%. NASDAQ 100 better than by 1.5%. It is now the belle of the ball. That honor was previously the Russell 2000. Small cap still holding on to a strong gain, better by about 1.33%. We'll hear more numbers from the banks with Morgan Stanley on deck to report its results tomorrow. Analysts are expecting the investment bank to post revenue of more than $19.8 billion. The bank's leaning into crypto today, announcing the launch of a Bitcoin trust designed to track the performance of the leading digital asset in the crypto sector. Now, shares of Morgan Stanley are up about 3% year to date, more than 65% on a year-over-year basis. Time now for the breakdown. Joining us for that, we want to welcome in Kevin Green, senior markets correspondent, taking a closer look at Morgan Stanley this afternoon. So you've been all across the bank since yesterday. Big week for the focus there. Morgan Stanley higher today, gaining some ground along with this broader momentum that we're seeing in the market. Talk us through expectations first, KG.
Well, if you're looking at the other earnings from the financial institutions over the last 24 to 48 hours, Diane, we actually see a setup where Morgan Stanley could thrive in this environment. We are looking at a business that really focuses on wealth management, as well as focusing on investment banking. Now, if you're looking at it from a year-over-year basis, investment banking was relatively weak this time last year, but it is starting to pick up. And then obviously we know that we have some major IPOs coming at the back half of this year, potentially with SpaceX, potentially also looking at OpenAI and others that they could be involved with. And that could also be a tailwind for them when you're looking at their guidance. And then when you're looking at the wealth management business, if you're kind of going back and looking at JP Morgan's earnings announcement, it seems like that's been holding up relatively well. And their fee structure has been able to drive top line growth here. The market is looking for around $20 billion of revenue for the quarter, and the EPS estimate sitting around $2.95 up to around $3 even here. But I think you're going to be really focusing on the trading business as well as the wealth management. That's going to be the driver. Now, I know Goldman Sachs had their earnings on Monday, and she actually missed when it came to the fixed income trading portion of their business. But that does look like that was an isolated event, maybe a trade that went the wrong way, because when you're looking at JP Morgan or even Citigroup for that matter, they actually did provide positive fixed income trading results compared to the earnings expectations. So this one's setting up pretty well. And even today, it's up over 1% on the session. And if you're looking at the weekly chart, it does appear that it wants to challenge some of the recent highs that we've seen about a month and a half, 2 months ago.
So is the expectation going into this that Morgan Stanley's results could be pretty resilient and fall into the stronger camp when we think about the banking sector this week, especially when you mention like some of the IPO activity and the strength in wealth management?
Yeah, if you're kind of looking at the setup now, the big question mark, I think, Diane, that you're probably alluding to, is it already priced in based on what we've already seen from some of the other players? And I think that's going to be a big thing going into this earnings announcement. We're still pricing in around a 3.2% move to the upside or downside. But just given the backdrop from Goldman, as well as from JP Morgan, and even from Citigroup for that matter, it seems like the results for Morgan Stanley, if they're going to hold up to this trend, are going to be positive. Is it going to be enough to try to break this out of this, kind of cup formation, if you will, or try to break above that 190, 195-ish area? That remains to be seen. Maybe a little bit of a high bar in order to do so, but they could provide some guidance that maybe the market's not really focusing on and tries to break through, maybe even testing that $200 level. But it seems like this is the environment where they're going to thrive. You could see maybe the guidance for their for net interest income maybe come in a little bit light, similar to what we saw for JP Morgan, but that would not be a surprise based on that yield curve spread that we've seen kind of readjust over the last month and a half.
Okay, great breakdown. That is Kevin Green, our senior markets correspondent. Thank you, KG. All right, let's get Tom and Kevin back in here for example trade purposes. Tom, this time you've got the example trade in Morgan Stanley. KG just mentioned, would their results kind of put potential for a breakout beyond the 190 level? But let's get into it. What's your approach for the example trade?
Or it might be a muted move. I mean, you got to take into context that we've already had Goldman Sachs, JP Morgan, Citigroup, Wells Fargo kind of report. Now they're more in alignment with Goldman Sachs, but maybe they have a little bit more diversification in their business, whether it's the trading side that they have, the brokerage business, the partnership that they have with that Mitsubishi Bank out of Japan. Their growth rate's supposed to be over 20% for that segment of their business. And then they're still involved with investment banking, wealth management, and all those others. So that might diversify them a little bit, but maybe the move's already built in. The stock's up nearly 4% just this week on the back of it. So I looked at it in that context. KG mentioned the one-day move is only about plus or minus 2.8% in either direction going into this report. So relatively muted on an implied volatility basis. So I looked at a strategy that takes advantage of a little bit more consolidation here at these levels. Maybe the move's already built into the stock due to some of its peers already reporting. But I went out to the April 17th monthly options that expire in just 3 days. We're going to sell an iron condor, or sometimes refer to this as a short iron butterfly, where I'm going to sell the straddle on the 185 strike level. So I'm going to sell the call and the put on the 185 level. That's just out of the money to the upside. And then to make it risk defined, I'm going to buy the 192.5 strike call on the upside. That's out of the money. And then buy the 177.5 strike put on the downside. So short $7.50 wide short iron butterfly here. You're going to collect roughly about a $5 credit on that. It might be a little bit lower than that as the stock's moved a little bit higher. But if you collect that $5 credit, that's what your potential profitability can be. You've got $250 in risk on this trade. That's either below the 177.5 level or above the 192.5 level. So Kevin, looking at this type of trade, it maybe sets up with a muted move post earnings where, hey, I sell it for $5 and I try to buy it cheaper after the earnings event and implied volatility levels fall because I've got some assignment risk because I'm short that 185 call and short the 185 put in this strategy.
Yeah, a couple things. This is at the tail end of the financials earnings. So maybe if the news is out and we hear a very similar story, the move will be muted because of that, right? I'm interested to see because I think Morgan Stanley compares more to Goldman than some of the big banks. And Goldman's fixed income, currency commodities was down, but JP Morgan's was actually up. So let's watch how that comes out with Morgan Stanley. But Tom, if the news is out, if this sector moves together and Morgan's news doesn't move their market, this is a really interesting setup for a lack of movement. And you sell it for $5, you try to buy it back for something less than $5 if it stays near that 185 strike. Interesting.
Yeah, and if you take a look at it, I mean, the stock's up 70% over the last 12 months, only about 4.5% off of those all-time highs that we saw in January, where we were sitting at highs for a lot of these big financial stocks. So it has pulled back, but making some ground up so far this month, up nearly 12% in the month of April alone. So this is looking for a muted move, Diane, in the stock post-earnings, where because you have that assignment risk, you'll want to close this ahead of time. And what you'll see post-earnings, which we historically see, is a vol crush in there, where this is going to actually cheapen up, where you can buy it for a cheaper price than what you sold it for. But I think the key on these strategies like this is you know exactly what your downside is, $250 per spread that you're selling on this one, but you've got a nice wide range between those break-evens that we've got up there between $180 on the downside, $190 on the upside. That's about that one standard deviation move that the option market's pricing in.
I see where you're going with this one, and I can see why this makes sense, especially in the context we've already gotten so much information out in the banking sector. It's getting rowdy over there in the pits. Kevin, I'll let you get back to it. That's going to do it for us today on Fast Market. I'm Diane King-Hall alongside Kevin Hinks and Tom White. You've got Next Gen Investing coming up.
So what is unique about Schwab Coaching is the community.
There's a lot of energy, like-minded people are learning with you.
You can just see and feel all the excitement around getting to learn a new topic.
Some of you want to get everything face-to-face with you and 400 or 500 of your closest friends.
clients. Some clients like to be in the privacy of their own home on an online workshop, but still having that live interaction with the coach.
As I'm talking, questions are coming in from that live audience, and they help me fill in those gaps as an educator.
People learn differently, but all those ways we actually teach it all come back to the point of making a difference and helping you make progress.
And so that means not just giving you theory, it means giving you the practical implementation using our platforms.
So we want it to be fun, we want it to be informative, and most of all, we want you to walk away with a skill set and independently be successful in achieving your goals.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Intern, this place is incredible.
It's where I get all your office supplies.
Your golf balls, your fancy coffee,
your giant TV.
It's everything in one place. It's like Schwab.
Everything investors need, all in one place.
Come again?
Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm gonna be sick.
We have to buy that now.
Schwab.
Invest your way with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we are seeing a pretty nice rally today that has held really on, again, these continual hopes of some further peace in the Middle East, as well as some bank earnings that have also gave a nice message as far as consumer credit and all of the concerns, of course, with the underlying economy. And so we're up just shy of 1% here in the S&Ps. The Dow's up just 0.5%. NASDAQ 100 leading out in front up 1.4%. And the Russell 2000's up about 1.2%, with all of our Mag 7 names higher today, aiding, of course, the NASDAQ's outperformance, Alex.
And did you know that if we were to close here, really just up on the day for the NASDAQ 100, it would be the 10th straight day of higher price movement, which is the longest winning streak since 2021 for the NASDAQ 100, which I thought was pretty incredible considering all that has happened in this AI boom post-2023, the bounce back in 2022. Yeah, that's pretty impressive little run we got going here as we work our way back towards all-time highs.
Yeah, and I mean, markets, as we were talking about yesterday to kick off our show, we were joking how it's been like the most, it seems like pessimistic rally with the S&Ps at that point only sitting about 2% below highs. Now we're only about 0.7% below highs, in at least the S&P 500, of course, with this 1% move definitely aiding things here. So markets continue to firm up in real time. Obviously, as we get the full slate of really earnings, it will continue to see hopefully some improvement. Also, obviously, things could always trend the other direction depending on earnings.
One of the things we've talked about too was, hey, high valuations. It is a long-term, valuations are a long-term kind of indicator of potential returns. That's why that's such a cited metric, but it doesn't really make a huge difference sometimes on a shorter-term basis. But we talked about how those could correct. And one of them was some sort of swift price move to the downside. When you move slowly or fast to the downside, you change the price component of that. It can quickly kind of recalculate and be something a little bit more normal. You saw that in that August sell-off with the tech stuff a couple of years ago. Then the other way was you can just correct through time. And we've sort of done a little bit of that in the sense that the NASDAQ 100 hasn't made a new all-time high since the end of October. So we're coming up on a 6-month time frame where the NASDAQ has basically gone sideways. And so 6 months, half a year, you look at that and say, pretty good way to correct is just go sideways for a little bit.
It is a pretty good way to correct. That's true. And the sideways, again, movement has felt so like, we're so quick to say that we're like in an AI bubble. Valuations came up. All those things could still be true, yes. But I mean, fact of the matter is price for these overall markets has still actually held up relatively well.
Yeah, and especially when you look at some of the carnage in software names. And at some points, I would say carnage and even a name like NVIDIA, granted it's come back a lot, a carnage in a name like Tesla. Some of these are really important names to market sentiment. And in the case of NVIDIA, it's very important because of the size of the company, the market cap weight that it has. It's still even now, $18 or so off its all-time high? I mean, that's a lot of market cap when you talk about a company that every dollar is like 25 billion. So it's good to be king in many ways, but we're still hundreds of billions of dollars off the all-time high.
Yeah, that is true. And so we're still a ways away, but obviously at least seeing an overall market recovery. And again, in a lot of these individual names is where you sort of see that real correction from these highs. But as we always do throughout the next hour, we will focus more on some of these individual movers. We'll kick things off with several of these key movers to keep on your Tuesday radar. Then we'll dive into the charts and example trades in Dell and HBQ, as we did see some news that initially sent Dell on a bit of a tailspin. Shares jumping yesterday following reports that NVIDIA was looking to purchase the company. And then we saw those reports come out to not be true, and then shares have rewritten to the downside a bit, as well as HPQ, so seeing some weakness today. We'll also dive into Citigroup earnings with shares, continuing to be higher throughout today's session. Really positive commentary surrounding the company's overall turnaround plan under their new CEO. And then we'll dive into really what we're seeing as far as crypto, the overall world starting to look a bit more like Wall Street, with the yield-bearing stablecoins, vaults, and structured products pulling closer to crypto as traditional finance and some of these forces rethink how we think about that overall space. And last but not least, we will discuss American Airlines here today with some news that United has reportedly pitched federal government officials on whether it could get permission to merge with American Airlines, which is a very interesting concept that I'm sure will be subject to lots of regulatory scrutiny, but we'll dive into that conversation a bit more later on.
Yeah, that's an interesting one. We'll see what Jeff has to say about that, Jeff Pierce, later on. That would be pretty groundbreaking. It's not unique. The space has certainly seen tremendous consolidation over the years, but we're talking about two of the biggest operators on the planet potentially teaming up. So that'd be interesting. Let's talk Microsoft, though. Speaking of that software carnage, this is definitely one of the names that has seen a bit of that. Now, it's happened in kind of slow motion because it's Microsoft after all. But this stock traded for $5.55 a share back in July. It tested it again right around when the market was making a high in October. And, well, that was the last time that there was a lot of green on the screen from Microsoft for any extended period of time. It's kind of been a one-way street to the downside.
Yeah, it has. And this is a great example of when we say markets are nearing these all-time highs, but there's still these heavyweights that are not, frankly. And so Microsoft is at least getting a lift today. Not with the most positive of news, though. Multiple analysts did reduce their price targets on Microsoft. We'll start off with this Piper Sandler note. They cut their price target to $500 a share from $600, which obviously still implies, about $106 of upside from where we're currently trading, but they did keep an overweight rating, saying that 2026 has been rough for enterprise software, and as the frontier model providers move up in the stack and compete with the incumbents for these IT budgets, investors are reassessing terminal multiples. They did also reduce their overall multiples for the group as we assess now first quarter earnings expectations and downgraded several other names. Mizuho also, though, with a price target reduction, actually very similar, from 620 to 515, also again still implies upside, but also with an outperform rating. The firm did adjust their targets for their large cap software as part of, again, a first quarter preview, saying that channel checks were overall solid with cloud and consumption data still pointing to generally good demand and AI adoption remaining very strong. But cybersecurity demand was mixed, and their favorite stocks to own now are things like Cloudflare, ServiceNow, and Atlassian. So that's interesting that we saw that specific call out of cybersecurity because it's been such an uneven performance from that group as of late. We did also get some additional reports outside of the sell side that Microsoft's exploring the potential of technologies like OpenClaw in an enterprise context, including some of these various agents that work within Microsoft 365. That's per the information. So lots of news with Microsoft today, but not enough to really erase some of their losses. They're still about 20% lower this year.
Yeah, and perhaps some positive news too is just hit the headline, I don't know, an hour ago, half an hour ago. Microsoft looking to take over a Stargate data center in Norway that was initially dubbed and intended for OpenAI. Be 30,000 additional NVIDIA Vera Rubin chips from the Neo cloud provider Nscale at a campus up in the Arctic Circle in Norway. This builds upon a already $6.2 billion commitment Microsoft had made at the same site. So we're watching this sort of reach and grab of all this capacity by these companies, and the second something opens up, somebody else snatches it up.
That is very true. And Microsoft, again, here is still a very important player, just hasn't been the one that has been in the headline generating news, at least to the upside. It seems like there's a lot of analysts right now just assessing their position as we do, of course, approach earnings. But our next name today is very much a closely linked peer to Microsoft. That is Alphabet here, with Citi actually raising its price target on Alphabet shares to 405 from 390 with a buy rating. Also did add it to its upside 90-day catalyst watch ahead of their first quarter report, which will be on April 29th after the close. And so I know that that's one of your favorite terms, the various lists, the way they try to really lineate their lists, I think are always so interesting. But they did go on to say, given at least the positive online advertising checks and Google Cloud demand momentum, they believe that right now their overall results are likely to beat expectations. And I mean, I have to say, for all of the Max Evans credit, it's very rare that we see a massive headline miss by any means, but it's more to me about ways that you're pacing your CapEx, the ways in which you're able to still accelerate your revenue, and everything about guidance right now has been so critical. So we do have that report to look forward to at the end of this month, which will be here before we know it, but Alphabet making a nice move today, up 3.4%.
Yeah, and one has to think, Gemini, maybe it won't be the number one, or it isn't the number one, AI model that's out there right now, but given where it's kind of embedded just in your traditional, Google search, it's going to make some noise, and Alphabet's really positioned itself nicely. That said, I do appreciate the 90-day catalyst watch. I guess in some ways they're saying, hey, I think it's going to not only happen, but I think it's going to happen in the next 3 months, which is a little bit shorter time frame for traders. So for those who are looking for reasons why Alphabet may move higher, that particular analyst did lay them out. Speaking of a stock trying to move higher, but convince me when you can, I guess, is Ford Motor, because this stock, it does what it does, and it's back in that range.
It really is back in our favorite range, nearing now about $13, which we put it at our favorite range, which I think it was the perpetual $13, $14 a share. But making a 3.6% move today, so no small move for Ford. Now, per UBS, in a note that they issued today, they did say that Ford has a credible path to delivering now 2027 EPS above $2 a share, with a march towards $3 beyond 2027. The report did point to, others in their product portfolio and a more lenient U.S. regulatory backdrop, as well as an emerging battery energy storage system opportunity. Also went on to say that concerns over higher gasoline prices and aluminum prices are overdone, as aluminum prices are hedged and not impacting now 2026, saying that right now the market is pricing in earnings per share, at least, that would be 16% below their forecasts and underappreciating some of the headwinds that are dissipating now into the second half of this year and into 2027 behind their earnings power. And so UBS did upgrade shares to buy from neutral, does have a $15 price target, so at least would provide, if we, of course, were to reach this analyst price target, some degree of upside, because this name is still about 15% below those levels and is still down about 4% on the year, but actually still up 35% over the last 52 weeks or so.
Yeah, it's I don't know how next gen it is, but it's certainly a name that is pretty consistent. It's a dividend type of stock, so maybe one that's more likely to be found in the Dow Jones than any sort of next gen index, but trying as it is. Let's talk Bloom Energy, because this one I think just has next gen investing written all over it.
Especially when you see a 20.8% move here in real time. Yet this is volatile at best, and also now adding to its 145% gain on the year, at least so far. So shares are continuing to rip higher after the company signed an agreement to supply energy for Oracle's data center build out and expansion of the company's existing partnership. So the company did say late Monday that it will be supplying up to 2.8 gigawatts of fuel cell energy systems for Oracle, with an initial contract for roughly 1.2 gigawatts of capacity. The energy supply will support Oracle's AI and cloud compute infrastructure. And this continues to really support the overall view that Bloom is poised to be a major player in the AI infrastructure build out. And I saw the team at UBS give a note on this partnership saying this reinforces a structural shift that we're seeing towards distributed on-site generation, positioning Bloom as a key near-term beneficiary of grid constraints and AI infrastructure build in their view. So continuing to pile in then the bullish activity, and a new all-time high today. So finally a name actually that's more corresponding with the overall market strength, as we're, again, outperforming the market, of course, but at least touching these new all-time highs and just ripping here for a name that had been stuck fairly sideways prior to at least today's move.
What I was really impressed by, too, is that one of the reasons Oracle expanded this deal was that Bloom delivered a fully operational system in just 55 days, which was way ahead of the schedule they were looking for. You don't read those stories anymore. There's so much bureaucracy and slowdowns and regulations, especially when it comes to power. You just don't hear, hey, something got done on time, let alone 55 days and way ahead of schedule.
Yeah, it's actually very encouraging and such a good point that you when you see these major things go through and at a relatively quicker pace than some of the other things that we talk about, it feels like for years before we actually.
Grand Theft Auto, whatever they're on, is that ever going to come out?
GTA 6, I feel, or the new launch of Siri, these are things, we talk about for years on end, but nice to see a deal get done efficiently at least. We will leave it there for the top of our show today, though. Now, coming up next, time to dive into the moves we're seeing to the downside in both Dell and HPQ. Dell, of course, was rumored to see some potential buyout interest. Then those talks then fell apart just hours later and seeing a bit of downside. So we'll dive into the latest technicals in both those names coming up next.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for the Chart Master. And so joining us now is Rick Ducat to help us break down some technicals in two of our more enterprise and also just hardware exposed names. I guess enterprise was contradicting things here, but we're looking at HPQ and Dell. Both lower. Dell is seeing about a 3% move to the downside here. So walk us through what we have seen from the chart in Dell, because this name has actually held up relatively well, but then of course has seen a bit of a pullback, not completely immune to the overall tech weakness we've seen as of late.
Yeah, I mean, overall, since our last earnings event, it's been a pretty nice move to the upside here. We hit our highs just yesterday, 191.37 there. And we can see also that today's price activity forming more of a Harami type candle. We had yesterday's large green candle, today's smaller red candle, so far completely encompassed within the real body of the previous day's candle. That's the distance from the open to the close. So a Harami is suggestive of indecision on the part of traders, of stall and momentum here. So kind of an interesting setup here after this big push to the upside we saw yesterday. So now if we were to look at our overall price pattern, more of a rising wedge type shape here. So we have one steeper trend line going across the lows, one more shallow boundary line going across the highs. Typically, this is regarded as a bit more of a bearish type of setup here, but really it can go either way. It isn't like it's set in stone that it's going to fall here, but it is suggestive that we are seeing somewhat waning momentum. We have increasingly anxious buyers, but the sellers are more or less remaining firmer. So we can also see here some notable price levels. We had our recent lows here around 177 or so. Old highs here near about 166. Meanwhile, our old previous high close came in around 185. So some areas to consider going forward. When we do look at our moving average picture here, we can see that for now we remain above our short-term 5-day EMA in dark blue. That one comes in just shy of 183. Our teal 21-day EMA, that one comes in a bit to the more toward the downside, getting closer to our trend line near about 170.68 at this point. So moving averages for now still continuing to diverge farther apart from each other. Not really seeing a lot of signs of trend interruption just yet here from that perspective. However, what I do see is that we have some breakdown on the RSI, a little bit of bearish divergence here. So price made higher closes. RSI is trending downward and is no longer in the overbought area here. So a bit of a mismatch between price and momentum. Again, not a crystal ball telling you price is going to drop off here, but what we are seeing, as I said, is slowing momentum near significant highs. So not exactly what you would want to see if you were bullish in this name, kind of not really exactly lining up with that kind of perspective. But again, what the bulls would want to see would be for a reassertion of a push above of those old highs here, and for the momentum to start to improve once again, and ideally to cross back into that overbought area. Now, not really too much in the terms of notable volume activity, a very small pocket here near about 185 or so, but really things start to pick up down here near about 165, and then more major nodes down here near the 150 level or so.
Okay, and so as we do, of course, assess Dell today, a huge part of the weakness we saw was on like false news that ended up not playing out. So it's interesting. I know obviously it was higher yesterday on the hopes of that news, but now today giving back some of that strength here in real time. So as we do now assess trading Dell for example purposes, Alex, leaning into the fact that we don't have earnings for quite some time. This name reports typically later in the cycle, but has definitely been at least one to watch because it's been, again, the subject of some of this deal making that didn't end up, of course, going through.
Yeah, regardless of that, I mean, it's been on a tear. It's basically at its highs still. If you think it's going to make new highs, maybe test 200, big round number over the next couple weeks. I got an example that's looking for that to happen somewhere between the last week of April and perhaps the beginning of next month in May. It's a 200 call calendar, selling the April 24th expiration, buying the May 1st expiration. The difference between those two options, that'd be your debit paid. For this example, we'll use the $1.25 debit for the price. That $1.25 debit's going to coincide with a $125 max loss. That's the risk on this trade theoretically. Nice thing about this style of trade is they are customizable. You can adjust that strike. If you were bearish, maybe you would look to the put side. And so you can move things around. We've often described this as sort of throwing a dart at the dartboard. And the closer you are to your target, the peak of this risk profile, that apex at our strike of 200, you can see the better that it does. This teal line represents theoretical profit and loss near that expiration of that April 24th option. So with this one, Jenny, best thing you could have happen would be Dell move higher, and the closer it could get to 200 by April 24th, the better.
Yeah, and again, we don't really have any major near-term catalysts, but obviously has to ride the wave of volatility when we get everything that is related to Dell's earnings reports in the coming months and weeks. But now to shift into HPQ, talk about a very different chart. I mean, almost the complete inverse of like what is working in tech, what is not working in tech. And unfortunately for HPQ, kind of finding some consolidation near this recent low, and we've yet to really see a meaningful breakout.
Yeah, I agree. I think that's about the best you can say about this chart is that at least it isn't getting any worse in the nearer term. Mostly we've established a pretty consistent low point here near the 1830 level. We did have a notable departure after earnings to the downside here, coming in at lows near 1756. But in terms of our actual closing prices, we remained fairly consistent above that 18 level. As I said, though, 1756 would be more of an absolute low point in the yearly chart frame here to keep in mind about. So the 20 level to the upside, meanwhile, that's around where price keeps repeatedly has been stalling out. We did make, again, intraday pushes beyond that level, but in terms of closing prices, not really any progress above that point here. And really more the 19 level, 1950 or so, that's around where things have kind of started to falter a little bit more in the nearer term as well. One other level to watch to the upside, 2250, roughly where we had our worst close before the earnings event that we had in November. That could be one area to keep in mind going forward if we do start to see a resurgence in price. When we look at our moving averages next here, we can see that our shorter term moving averages, our 5-day in dark blue, our 21-day in teal, are right on top of each other here, right around current price activity. They both come in around the 1880, 1890 level. Our 63-day in gold comes in at about 1970 to the upside. That is also where you might start to see a break above our trend line boundary there, give it for our symmetrical triangle type shape. Our two boundary lines kind of converging toward each other in an increasingly narrowing range. Often this can be a sign of higher volatility on the horizon. It may feel a little boring while it's happening, but low volatility often can be the precursor to higher volatility when we do eventually see a breakout beyond one of these more established levels here. RSI kind of matches up pretty closely with our price activity here. We are a tad below the 50 midline here, so look for RSI to mirror a corresponding breakout in price for greater confirmation and further credence to any kind of directional move here. When we do finally examine our volume profile study, the heavy trading in this chart has been right around where we are now. The point of control for our volume profile comes in right around 19. That's our thick red line here, you can see. So this node here between about 1850 to 1950 is an important region to watch out for, not only because we're getting very close to the significant lows on our chart, but if we do start to push above that level, it would be noteworthy then because the next area in question, around 2150 or so, stands out. Heavy volume at significant lows is often interpreted as a sign that this is a significant price level that we've reached here. Again, certainly it's not a guarantee that it's going to hold on here, but rather this is kind of more of a make or break point now at this level here. We could see some further pain if we do decline more, or it could be the setup for more of a convincing bounce to the upside, depending on your thesis about the stock.
Yeah, and obviously that's a good point there. And obviously, if you have very strong conviction in this name, you could lean into hopefully some upside if you expect this name will recover. But unfortunately, price has shown us time and time again, we're sort of finding this new footing at these recent lows, down another 2% today as well. But appreciate it to Rick Ducat for all of that technical setup here. And last but not least, as we think through trading HPQ for, again, example purposes, again, say you're hoping for some upside. Say you're hoping for a recovery, and that earnings maybe in the coming weeks could provide that lift.
Yeah, the stock, based off that sideways action, so much of the point of control and the lower end of that value area kind of stuck in this 18 to 20 zone. It may take a while for a meaningful breakout to actually occur. So I looked at a call debit spread centered around that range, where maybe it just chops around in this range for the next month, and this still has a chance to not only be profitable but also hit max profit. So it's the 18-20 call debit spread, looking to spend $1 expiring May 15th. That $1 is the risk on the trade. So you risk $100 with a chance to make $100. Break even is 19. Before the show, the stock was trading right around that, maybe 10 cents below it. So you didn't need much of a move at all, Jenny, to break even. But if you got a drift towards 20 again, a chance to make 100. If it goes down to that lower end of the value area, your risk going in. Because one of the big risks when a stock's trying to base out is, well, if it breaks that range, maybe it hits that trap door and it falls through. And then next thing you know, you're talking about $14, $15. Big risk if you're a shareholder. Well, you wouldn't have that risk with this strategy, as your risk going in.
That is very true. And I think the very important takeaways of being risk defined, especially in this market, that every day feels like a very busy news cycle for us here, and of course for some of these individual equities. But we will leave it there for Chartmaster today. Now, coming up next, it's time for FOMO, and we're diving into one bank that is seeing some significant upside really right off the gate. That is Citigroup. We got those results this morning with real evidence that its turnaround is continuing to take hold.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Pop.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. It's now time for FOMO, and we are discussing the move today to the upside in Citigroup, which has been really right off the gate when we got those numbers first thing this morning. So joining us now for some more on what is really leading some of the optimism is Kevin Green, Senior Markets Correspondent for the network. So KG, walk us through these numbers, what stuck out, and why this name I do feel like is getting a bit more attention than some of the other big banks. I know difficult to say, but does feel like their leadership and their turnaround story is really starting to take footing here, with at least price now up about 3.3% on the day.
Well, Jenny, it's because this company here, if you're looking at Citigroup, is actually cheaply priced compared to its peers within this space, and rightfully so. They have gone through a transition over the last couple of years, divesting themselves away from the international markets and some of these niche type of industries, and really getting back to focusing on consumer banking, commercial lending, as well as investment banking. So that has been their bread and butter, and they are starting to see results of this transitional period. Once again, that's been taking a fair amount of time in order for them to complete. Now, the company was actually able to report revenue at $24.63 billion. That exceeded the street's expectations of $23.7 billion. And if you're looking at the adjusted earnings per share, once again, exceeded the street's expectations, coming in at $3.06. Street was looking for $2.64. Now, this is actually the highest quarterly revenue in a decade for this company, just showing that turnaround period. And what was also very interesting is that leading up into this report, the stock was actually trading at around that $125 level, and that was a key neckline area of resistance. So the fundamentals that were reported today are giving it the follow-through boost that you would like to see, breaking it above $130 at this point in time. Now, when you're looking at the total market revenue, that came in at $7.2 billion. So the trading revenue did show very strong growth on a year-over-year basis. Equity trading grew by 39% on a year-over-year basis. And if you're looking at investment banking, once again, seeing that division actually still grow here, increasing by 15% year over year. Now, the only thing that is kind of a sore spot for Citigroup, and it has been for the last 5 years, 6 years, has been the exposure when it comes to credit and provision for credit losses. That came in at $2.8 billion. But if you're looking at their consumer banking business, they're still writing off a significant amount of their portfolio there. But the market has been able to discount that out, and looking forward to some of the growth opportunities for this name. So that's why we're seeing this boost. It actually moved more than the expected market maker move, which was sitting at around 3.1% yesterday going into the close. And hopefully we're able to see this one continue to the upside and potentially to that 140 to 145 level.
KG, talk to us about those levels and the technicals, because, look, I'm just playing armchair here, but it looks kind of like we're in the midst of a breakout. Am I wrong?
Oh, yeah, no, you're exactly right. You're looking at a breakout to the upside here. 125 was that key area of resistance, pretty much actually basing out here since December of last year, and now we are breaking out higher. If you're looking at it from a technical standpoint, you take 125, go down to around this 100, let's say $100 level. You're looking at around a $25 range from top to bottom of the cup. And then you just add that to the breakout period, so 125. So you're looking at around 145, 150 as your next major area of resistance. If you're just looking at that simple technical setup that a lot of traders and investors kind of look at over the long term, especially if you're looking at a weekly chart. So you're right, making higher highs, making higher lows. Fundamentals are backing it up. Still trading at a treat multiple at around 12.5, 12.6 times forward multiple here. So this is actually a name that could get a little bit more traction when it comes to asset dollars, especially from institutional traders and investors.
Okay, so KG, when you assess the takeaways that we've gotten from the financials overall, would you say that Citi stands out as a leader, or would you say that entirely the picture still looks pretty intact, pretty strong?
I would say across the board, it looks relatively strong. JP Morgan obviously cut their guidance when it came to net interest income, and rightfully so. If you're looking at that spread between shorter duration maturities and longer duration maturities, if you're looking at just the treasury yield curve itself, it has been coming in here a little bit, which is going to put pressure on profitability for net interest income, and rightfully so. But each one of the businesses and companies that we've seen report so far have been able to show and reflect strength in their own niche of their market. Consumer banking, that's going to be Citigroup, looks actually really decent at this point in time, minus the write-offs, which once again, that's been a sore spot for them. Investment banking is something that's going to kick off and get a little bit more aggressive and see some tailwinds at the latter half of this year. I think that's going to be something to be mindful of. And Goldman Sachs is the only one that kind of missed on the fixed income trading. It seems like they may have had a flyer when it came to their portfolio. So overall, we're actually looking pretty good. If you're looking at the private credit risk, though, Jenny, these are not the names that are going to show you that type of risk. You're going to wait until you hear from a KKR or some of the others within that space, Carlyle, and then also looking at some of the smaller banks that will be reporting in the next 2 to 3 weeks for the credit risk exposure. But for right now, we're holding up from a financial system standpoint from some of the majors out there.
Yeah, and I think a good point there that we still have, I mean, the rest of the financial really scope to sort of parse through. So it's not like we're entirely out of the woods just yet, but at least some strong signals from like Citi, Bank of America today. Not so much the case for like Wells Fargo and JP Morgan, but Citi having a nice move at least. So we'll at least focus on the positives there. But appreciate it, Kevin Green, for all of that breakdown. Now, as we do assess looking at Citigroup here, Alex, of course, the difficult job of trading this name, given the fact that there is still the rest of regionals to report, as well as we're looking at it on a pretty nice day. I mean, 3.5% move is no